right, everything looking good on my end. Let's go ahead and get this stream started. Should be going live any moment now. All right, let's go. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Today is 10/3/2021. Obviously getting started off with our new monthly. And of course, fourth quarter of 2021. It is 8 p.m. Eastern Standard Time. And we're going to take a look at, everything, like always. I'm sure there'll be a little rant in there as well. So if you're new to the channel, make sure you like and subscribe. And we're going to do everything from our cryptocurrencies, traditional markets, sectors, indexes, and of course our commodities as well. So let's go ahead and jump right into it and see where we're at. Obviously, we had pretty much everything was playing out as planned this week. Got a nice little pop-up on Bitcoin. Had a beautiful trade setup, work out perfectly on that. We basically had that, downward descending channel. And we took a entry on the close of the 4 hour at like 44.8 basically, and got a nice pop up. The trade setup was potentially for like 14%. We didn't quite get up there yet, and I actually went ahead and took some profits around 48,000. I might have said 100, but yeah, 44,000 to 48,000 roughly. So about 10%. Not bad, not bad. I did some trade on Ethereum as well, and couple of trash bag altcoins. So but yeah, let's go ahead, jump into our markets and see what we are looking at for this week. So just starting here with our 10-year treasury yield. We obviously are getting a pullback on the yields as expected, as we are basically just running into that resistance. Up inside the bullish control zone still. We had gotten quite a bit away from the 8 moving average, 21, and now we're both on top of the 200 exponential and the 200 simple as well. So that is obviously good. They are both sloped to the upside. So we are on a daily uptrend. We are seeing our first weakness on the histograms. Still well above the zero line, well above the slope line. Everything is still extremely bullish right now. But as we can see, we basically hit our target perfectly. We would expect any area that acted as support previously, which is like the 1.55 level, to act as resistance as we get back to it. So, but this is what we're looking at. Obviously got a lot going on here. Let me turn off the moving averages real quick. But, we have basically burst back to the upside out of our descending channel. And then here's our measure move, very similar to what Bitcoin did. We got our measure move now. The initial green measure move was up to 1.52, and then the blue measure move is slightly higher at like 1.59. Basically have all but completed the initial measure move of the break of the channel. But now we are consolidating at or above currently the 618, which is our yellow Fibonacci from the top back here in 2018 to the bottom here in 2020. And then now we have formed essentially our cup pattern right here, the large green arc. And then we come up to a resistance line here. And now we had a descending channel that burst out to the upside. And now that is forming our smaller arc right here, which retraced exactly to the 0.5, of the Fibonacci level. So now what we would expect is the measure move of the break of that pattern, or alternatively a left shoulder, head, right shoulder, and then the break of the head and shoulders pattern, which is going to be the measure move of the actual arc itself, or of the head to neckline, which is going to give us basically our break to the top of the range, somewhere around between 2.5 and 3 on the rates for the 10-year treasury. So that's what we're waiting on. Still could take a little bit of time, kind of oscillating around. But right now, the range that I'm really paying attention to is in between like 1.45, which is where we're at now, and basically 1.65. But obviously, any moves to the upside on this are going to put extreme pressure on the markets, especially the over-leveraged areas, such as like, for instance, but not to pick on the tech sector. And then obviously, if we zoom out, look at the big picture, we came up perfectly to the 200 exponential moving average on the initial move up back in March. And then we came back down, found support at a higher low from our bottom here. And now we're coming up here. Now this does potentially look like at least a weekly weakness or topping candle. We are below the blue slope line here. We have multiple green histograms about to come up over the zero line. But at this point in time, not particularly great as far as momentum. I don't like to see the slope line still blue and us below it, but oftentimes we'll come up to it, retest, and then come back down and reset. But typically what will happen then is we'll come up higher on price action right here. So there's a very high likelihood still we burst through the 200 exponential, we get all the way up to like the 1.8 or 2 level, and then we get a slight rejection there before a further like longer consolidation. But again, that's on our weekly for the 10-year treasury. But if we switch over to the monthly, that's where we get the overall extremely, bearish, obviously, pattern that we've been inside of for, since the 80s. So, 30 something years, we've been in a downtrend here. But in all reality, what we're expecting is essentially like a larger move up eventually to that like 2.7 to 3 range. Here we have the hard buy signal coming out of the bearish control zone, finding some resistance on the entry into the bullish control zone up here at 80. And then, of course, the bottom of the range, all green histograms above the zero line, above the slope line. And if we just consolidate or stay up here long enough, we will flip this slope line over blue and expect that continuation to the upside. But let's keep in mind that from the top of the pattern back here in October of 2018 to the bottom down here, it was September 2019. So, we're talking about basically a 1 year time frame on that move. So there's a possibility this takes a year to get up here. We're on a monthly chart. So in the next 12 candles, we chop around a little bit and then move up to the upside. In a year from now, we're sitting up there at essentially a potential topping pattern around 3. So people are saying by the end of the month, by the end of the year, by 6 months from now, this, that, and the other. The truth is, when we're looking at a monthly chart and we're looking at relationship and the symmetry of the pattern, it's realistic to think that we probably have a year until we get up here around that 2.75 or 3 range. And what's that line up with? Well, let's look at what the Fed's got planned. They're talking about tapering. When's that going to start? Well, maybe by end of year, or they're going to announce it by end of year. So they're going to start tapering asset purchases. Then say they taper 20 billion off every month. It's going to take them another 6 months then to not be buying the 120 billion that they're currently buying, assuming we don't run into any quote unquote hiccups or taper tantrums along the way. Then they still have a balance sheet of like what, 8-9 trillion by that point in time. So then they're going to start slowly reducing the balance sheet. So then how long is that going to take? I'd say probably infinity, but let's just say, for instance, they start slowly selling over that time frame, and then eventually they raise rates when? By then, 6 months has gone by for the taper. Now we're mid 2022. Then another 6 months of, reducing the balance sheet supposedly. So that's another, 6 months to, let's say a year from then. So then we're like mid 2023, and they're potentially going to be like raising the Fed funds rate. So I don't think it's unrealistic to think that this could take easily over a year, and we could be here, December of 2022 talking about, oh man, interest rates at 3% and the Fed still hasn't even touched the Fed funds rate. Not unrealistic. And what is that going to correspond with? Well, probably a deleveraging in the system, or, potential crash of a lot of different assets. So, but again, it's important we realize these charts are telling us the daily is bullish, but is getting a little bit tired. The weekly already looks like, it could potentially be, a few weeks sideways or even down. So it's not just going to happen overnight. I think people get excited when they see a move happening, and often they're late to the party. With us, we're expecting the move ahead of time. So then the move happens and we're already prepared for it, positioned accordingly. And then by the time everybody else gets on the boat is actually already sinking, and we're back on the other boat. We're on the life raft, or we're back on the main boat, and we've already fixed, the reason everybody jumped on the lifeboat to begin with. So that's why it's so important to be ahead of these markets. So what's going on, Jason? Good to see you, my man, always. Good in the hood, yeah. Oh man, same as always, doing well. Had a nice Bitcoin trade there, obviously, and some of the trash bag altcoins as well. Interested to see what this week looks like. I think typically, and Honkiness, good to see you as well, my man. Always a pleasure to see you too. And if you're in the chat right now and you haven't said hey, now's the time. Welcome everyone. I think a lot of times, statistically speaking, a lot of times what happens is at the end of the quarter or beginning of a quarter, people start rebalancing their portfolios, and then everybody kind of like is sitting there waiting to pounce, you know, like a tiger in the weeds at like what the next asset class or what the next like, you know, portion of the market or sector is going to run. So like that's how I'm looking at it. I'm waiting to see what's going to be the big outperformer of the next 3 months till end of year or whatever, etc. So if we look at TLT here, it's giving us a similar picture, obviously inverse to the actual yields. We have the 20-year treasury. I like to look at the 20-year just because it gives us a little more of like the longer end of the curve, obviously. You know, so we basically, the way I look at it is Fed funds rate, you know, gives us an idea of like what's going on in the short end. The 10-year treasury yield gives us like sort of like the middle range. 20-year gives us a little bit towards like the longer range. And they're all relatively similar in movements or inverse anyway. So here, if we look at TLT, well, we're seeing bearishness on the indicator oscillators. We're now here inside the bearish control zone. We have all red histograms, red slope line below the zero line, all bearish. You know, we basically sold off back here, and the 200 exponential and simple both went into a bearish trend. We popped up, tried to bounce them multiple times. This is an important thing too. What I look for when we're looking at a trend changing potentially, because the market can do what it wants. It's not always going to do what we think, but there's probabilities associated with everything. And the more times you see something happen, the more likely it is to happen. You know, higher probability it is of that happening, you know, but it still could be an 80-20 probability and the 20 happens. So that's what's so important. It's not just a coin flip. Does it go up from here or down from here? There's probabilities based on patterns, based on moving averages, based on, you know, historical data, etc. So when we look at this 20-year, we enter into a downtrend after an extremely long uptrend. This is an extremely long uptrend we've basically been inside of on the daily time frame since December of 2018. You know, so we've all but went in an uptrend for, you know, 2 years. And then we basically had like a 1-year pullback. And now this is us trying to reclaim the 200 exponential and simple. So that's bullish, right? We got back on top of them. We're just having a little retest and then we're going to keep going up. Well, that's what we need to pay attention to. Is that bullish? Because to me, it's not. This does not look bullish to me. Had we maintained on top of the 200 exponential here and kept the slope positive, had we maintained on top of the 200 simple here and kept the slope positive, both those things would look bullish. But it's not, doesn't mean we're just automatically bearish and that's it. But the most important thing is once we put in the top right here and we come back down, we put in a low and then we're bouncing and we're putting in higher lows. So that's good. But then we start putting in higher highs, lower highs and higher lows. So that's basically telling us, you know, the market is deciding. We're basically like in a range or a flag or some kind of sideways channel, something like that, while the market kind of decide what it's going to do. Well, the longer we're on top of the 200 exponential and 200 simple, the more likely they are, you know, the slope's going to start rolling to the upside. So it takes the 200 simple a long time, this pink one here, to roll to the upside. So all we want to do is stay above that. And if we do it long enough, it's going to look bullish again. And then the market's convinced, everybody's happy, and then boom, off to the races. But what's happening here is some warning signs. One, we close back below the 200 exponential and it flips back over red, which that's not a big deal. It did it here, it did it here. It's very reactive and it basically has like a zero or like neutral slope. So not a big surprise. But now here we have the 821 cross back to the downside and then we broke down below the 200 simple. But most importantly, we broke to a new low. So we have the high here, then we have a low here. Now we have a lower high here. So now we have a lower low here. So that is the beginning of a downtrend. Had we not taken out this low right here, we could say this pattern is still neutral. Or had we put in a high right here and then a lower low, you know, we could argue that that was just the initial pullback off of the high. But now we have essentially a high, we have a lower high, we have a low, we have a lower low. So now it's, you can't argue that we're not in at least some sort of a short-term downtrend on bonds. So that would, you know, reason to say that we're in some sort of a short-term uptrend on rates without even looking at them. So that's what I'm paying attention to now. Now we did move back up here and we did technically close back on top of the 200 simple. That's fine. What we need to see happen now is we need to get back on top of both these and see them roll over to the upside, and then bonds can potentially continue. But right now the bears are very much in control and the 200 simple is still angled to the downside. 200 exponential is still angled to the downside. So, you know, this is overall bearish. Overall bearish. And then if we just take a quick look at the weekly, what did we have? Well, we had a dead cat bounce off of the 200 simple. So this, we hit the 200 simple, got rejected off the 200 exponential, came down and put in a higher low on the 200 simple, and then we burst out through them, and then we saved the trend. But what happens here is we have a high now then we have a low, and then wherever we top out here, we're likely to get a lower high. But each time, you know, if you think about a bouncing ball and you like just stand over like, you know, a piece of concrete or something like that, and you just hold your arm out and you drop the bouncing ball, the first bounce is always going to be the highest. And then because of, you know, gravity and, you know, resistance and all friction of the air and all the different like factors, you know, of physics, each bounce is going to be slightly lower. Well, the charts are a lot like the same way. This is us basically, you know, think about it like this. This is us basically holding up the bouncing ball up here, and then we drop the bouncing ball, and then it hits the 200 exponential and simple moving average, and then this is our bounce. So the next time we come down to it, what's going to happen is if we come down to it, we're going to get a smaller bounce and then a smaller bounce. And then we just start rolling. And then eventually we roll sideways long enough. We're not getting barely any bounce. And then it just falls off of, you know, whatever we bounce it off of, the concrete slab or whatever. It falls off like a cliff. And then, you know, that's when we lose the actual overall uptrend. And we see that happen over and over again. You see right here, you know, you drop the bouncing ball, it bounces back above, bounces off of it, bounces off of it, bounces off of it, and then it falls and goes into a downtrend. And we continually, you know, keep seeing lower lows happen. And then eventually it bottoms out and we start moving back to the upside. But it's same thing on the like inverse of that. When we come up to the 200 exponential and simple the first time, we get a bounce away from them, and then we slowly break through them, and then we get, you know, now they're acting as support and they're bouncing us to the upside, and now it's the opposite. So that's what we're paying attention to. You know, and these are reliable ways to determine what the market is doing. Because in the end, the market is all just people, you know, buyers and sellers. But there's no bears, there's no bulls. It's just people that are bearish or bullish based on the price action of the market or the asset. And the truth is, people that play in markets are usually bullish on those markets. People that talk shit about those markets but don't participate, they're the most bearish. Other than that, it's just people trying to make money. So if there's bears that are participating in a market, they're probably participating because they like that market, but currently the charts are telling them something bearish. And I think that's a common misconception people have. They think like people are like, oh, I hate cryptocurrency, so I'm just going to like short it nonstop. Well, those people got wrecked a long time ago. They're not even participating anymore. They're out of the game. They got like, you know, they're fixed now. They're not even participants. They're broke. They quit. They're gone. So anybody that's bearish on crypto now that's actually participating in the markets, you know, is bearish because of what the charts are telling them, not because they hate crypto. Those people have been gone. They were gone 5 years ago. So TLT, you know, big boy chart here, basically telling us the same thing, but longer time frame on the monthly. You know, we sell down hard, we get the bottom, come back up, put in potentially our right shoulder here, and now here we are getting rejected by the 8 and 21. And we all know that's our beginning signal for what the market's doing. We see the 821 cross right here to the downside, and they turn red and pink. We go into a long, prolonged downtrend. We see them cross back to the upside on the monthly, turn green, long, prolonged uptrend. That's what we're trying to participate in. I don't care if the market goes up or down. I want to participate in the move or get out of the move here. Because here, you know, by the time they cross to the downside right here, you know, where was price action at? 118. So what was the absolute low on these? 111. So they only went down $7, like 5-6%. But the reason we want to get out of these markets so bad, and it's so important not to be participating in a sideways consolidation, is this was January 2017. We didn't break back above and go back, you know, positive again until April 2019. So that was 2 years of sideways. I don't know about everyone else, but I don't just have infinite amounts of money that I can just park random places and just wait. I would rather participate in a market that's moving in a trend, especially a trend that's in my favor for that 2 years. So when I see that happen, I step aside and say, hey, I'm going to keep my eye on you from a distance. And when I see you go back bullish, when I see what you're doing, when I get excited about your price action again, I'm going to be back. And that's the difference between me and most people are. Most people will never buy back into something at a higher price because they feel like they've lost because they're getting less of it. I'm not trying to accumulate these things. I don't want to just own more and more bonds over time. I'm not trying to have more Bitcoins. I don't want more XRPs. I don't want, you know, more of these random things. What I pay my bills in, what I use to buy things like assets, like property to pay my bills, I use cash. I use cash money. I use dollar bills, yo. That's what I want. I want those. Okay, so while I do accumulate wealth in the form of physical gold and silver, property, et cetera, et cetera, et cetera, some cryptocurrencies, whatever, my goal is to grow my stack, and then I'll buy into assets accordingly. I'm not a hodler. I'm not just looking to I'm not Scrooge McDuck filling up a vault with stuff that I never use. I don't, maybe one day when I have $10 million or $1 billion or $1 trillion, maybe then I'll just park stuff and leave it alone. But most people are not in that situation. And honestly, I doubt if anyone that ever watches any of these videos or participates in the majority of these markets, with the exception of like the 0.1%, is in a situation where they should be just hodling things. Now, I do believe in diversification of my portfolio. So it's good to have, gold and silver. It's good to have cryptocurrency. It's good to have property. It's good to have cash. Good to have all those things. So a certain percentage of my wealth will always be in these different, diversified fields. But I'm not looking to just park money for 2 years and have it do nothing. No, thank you. Not interested. So that's why it's so important, to find actual trending moves. So if this is telling us it's getting ready now after a rejection to go back into a trend, even if I love bonds, even if I want bonds, even if I'm not participating in bonds currently, or I don't want to be participating in them if we go into a 1 or 2 year sideways trend, let alone if we go into a downtrend that lasts for 1 or 2 years. No, thank you. And it's the same way with cryptocurrency. We're literally at the breaking point where we're about to switch between either potentially going back into a bullish trend and up to new highs, or into a bear trend that lasts for 1 or 2 or 3 years and goes back down to lows. So I'm sitting here patiently waiting. I might take a little scalp here and there, but right now we're at a decision point. We're at an inflection point. Whatever happens with the trend here very soon is going to last for a while, and it's going to have explosive gains or explosive losses, and it's going to last for literally years. So whatever happens, I'm going to be patient now and make sure I'm on the right side of that. And that's what's so important. That's the difference between me and most people. And that's why it's so important to look at long and short time frames. So right now, these bonds are telling us they're probably getting ready to do a little something like this. Come back up, retest, and then go into a downtrend. Probably going to put in new lows, which again, we have a left shoulder, we have a head, we have a right shoulder. And as a matter of fact, this is our old chart right here. I drew this hypothetically way before we ever even burst back up here. When we bounce the neckline, I put this in place with a guess of 0.5 as our target. And we literally got, all but a wick away, like $3 away on these bond prices, almost perfectly. So now we have a giant head and shoulders, potentially going to come back down to the neckline with a potential break or at least retest of support/resistance down here. So, tells me we have a lot of confluence, and probably I'm looking at the right things and we're doing something right here. Now, that just gives us high probability of success. Does not give us a guarantee in one direction or the other. So that's what we're paying attention to. So next we have the VIX. Obviously, after we touched the top right here, came back down to the middle, heartline area, got a lower high bounce, bearishly engulfed. As long as this is just giving us the inverse of the stock market. When the VIX is volatile, we expect probably selling or explosiveness in the stock market. When the VIX is doing nothing and just kind of bleeding out, right now we already had a big move, and then we had a smaller move after that, and we're at the neutral zone. This is our big pattern neutral on the historical horizontal channel. And then here's our descending channel, and that's our neutral, and we're literally right smack in the middle. So as long as we're between 19.5 and 21.5, I'm neutral on the VIX. So, and then we go to U.S. oil next. We'll see, obviously, oil is up here retesting those previous highs from a little bit ago. And without going into too much of a rant, heard Cathie Wood's most recent ARC, discussion. That woman has actually lost her damn mind. She was talking about whale oil and the trend changing, and how whale oil became obsolete and it took the market a while to figure it out. She's really reaching for straws here. And now that she's on the deflation camp with me, now that she's joined my team, or at least thinks she's on my team, all of a sudden none of her other stuff even makes any sense now. If you think we're about to go into a deflationary phase and rates are going to rise, how is tech going to do well? Because everyone knows tech's going to get destroyed if rates rise. And we go into deflation. It just blows my mind. It's she's confusing herself at this point in time. I think she just doesn't want people to flee her fund. But for the record, ARC did have record outflows. Cathie Wood's on her knees with record outflows, tears in her eyes, blood from her nose. You guys can get the full version if you want to just go into the page there. But just a little throwback to old Kathy. Kathy wouldn't want to be a. I mean, she's doing fine though. She's making her percentage. So, but oil looking good right here. Obviously, nice uptrend in the bullish control zone, retesting highs. We would expect to run into resistance right here. Obviously, that was obviously a key fib level. Now we're just bouncing that same fib level. 200 simple is above the 200 exponential, so we are slowing down on the momentum there a little bit. Let me see if we can't. Damn. I hate this freaking chart because of that stupid oil wick. Hang on one sec. We'll get it. All right. So if we just look here on the monthly, this is what we've been talking about. We're in now, and this is a perfect example too of what we were just talking about. Bullish move to the upside, come back down, break to a new low below that, come back up. It acts as resistance. And then after that, we fail to get back above it and then sell off to a new low. In this case, like negative. And then after that, we come back up. The move is done now. We've already went to 0 or negative. So you can't go any lower. We're already too low, bro. We can't go any lower. So then that's the end. That's the bottom. Now we start coming up here, run into resistance, accumulate here, higher low, and then eventually push up, run into some resistance at the 200 exponential, then the 200 simple, and now we're back on top of the 200 exponential and simple. So we had a small period of consolidation or downtrend that played out very quickly, and then if we consolidate here long enough, we would expect the uptrend to resume. Does that have to happen? No. But, looking at the monthly right here, we are in the bullish control zone. We are on top of the 200 exponential and simple. The 8 and 21 are across to the upside. We have all green histograms. We're above the 0 line, and the slope is blue. That's literally every part of every one of my indicator and oscillators telling me we are in a strong bullish uptrend. Does that mean we can't just top out right here and that's it? No, anything is possible. But everything that I have and everything that I use in these markets tells me that we are going to be heading to the upside. So what does that mean? Well, we're probably going to test the next resistance area. So in this case, we have obviously this little like flag pattern that played out back here where we have resistance from basically where we're at, which would be like the lows from this area to basically the top or the highs of some of these like wicks or closes. So we're probably headed on a slow grind up to like 108, 110. Do we hit all-time highs? Possibly. Maybe we do. I don't know. And matter of fact, while we're talking about oil, I want to talk about something else. I want to talk about something very important that I have not heard anyone else talking about. Okay, there are literally, the whole green initiative, we all know about that. The world's not ready for a bunch of EV vehicles. We don't have the infrastructure in place. There's nowhere to charge them. If tomorrow there was 2 million more EV cars, where would you charge them at? The infrastructure is not there. Okay, well, we got to build the infrastructure. So how are we going to build the infrastructure? Well, we're going to need to use the actual resources that we have now. So we're so far away from even building all this stuff, let alone to be ready to have the cars, let alone we don't have the cars, we don't have the windmills, we don't have the, hydroelectric dams. We don't have any of this stuff in place. So, you can be a liberal, you can want to cure the earth, you can be some, weed smoking hippie with grand ideas, and that's fine. I'm with you. I think we should try to do all these things. But let's be real, it's going to take time. And it's not going to take 6 months. It's not going to take 1 year. We're talking about 5 years, 10 years, 20 years. And you know what the answer is? Probably nuclear power. So that's why I'm so bullish on uranium long term and oil short term, because we're going to need all this stuff. And it takes time to make that transition. We're not just going to go from, hundreds of years of using coal and, oil and nuclear power and all these things to just like, hey, look, we got solar panels and we're catching rain and sucking the electricity out of that. And there's the dams and their power and everything and flowers and hooray, sunshine. No, let's be real. It's not going to fucking happen. Like, people are so stupid. Like, show me the plan and I'll show you a bunch of bullshit, because it doesn't exist. And if solar powers were so damn good, solar panels and solar power, they would be everywhere, because everyone wants free electricity. The truth is, they barely pay for themselves over their lifetime. And God forbid they get, crack or overheat or break or the sun doesn't shine, then they don't even pay for themselves in their lifespan. Most of these things take 25 years to pay for themselves. And then meanwhile, by the time they've paid for themselves, they're worn out. So you need to get new stuff. So it takes you 25 years to break even. So you basically take a bunch of money, you put it into something now, and then you get that money back and break even in 25 years. Well, anybody that knows about time value of money, and if you're afraid of inflation, that's literally the worst thing you could possibly do. You would rather spend that money somewhere else on something useful now, and then in the future, you could get so much more for it. And not to mention, technology going to change these things and make it cheaper over time. Probably the solar panels they have in 25 years are going to be exponentially better than the ones we have now, if it's even still relevant. So none of it makes any sense. None of that makes literally any sense. And then when we talk about the actual, I told you that so I can tell you this. What I really want to talk about is how what's going on in like China and everything with these energy shortages. Because I don't hear anyone talking about the energy shortages going on in China, and they're extremely important. What's happening in China? Okay, they use coal to make energy, and then they sell that energy to people. Well, coal prices have been going up in China. So if you're a coal manufacturer of electricity that uses coal and the prices go up, what do? You pass that on to the consumer. So you raise the price of electricity. Well, why are they having, all these shortages? Oh, all the coal factories exploded, or all the electricity, manufacturers exploded. They all went out of business. No, they're all still there. They're just not making electricity. Why aren't they making electricity? China stepped in and tried to regulate the market and said, hey, you can't raise the price of electricity per kilowatt hour over this price. So if you can't make a profit on something, and you're a business that needs to make profits because you're not a government, you're a business, and you have to have, make profit to stay in business, to continue to operate, you can't afford to take losses. So if you're barely breaking even or taking a loss, it's in your best interest to do less of what you're doing until something changes. So if the coal prices are going up and the electricity price is fixed because the government says you can't raise the price of electricity, one of two things has to happen. You have to stop making electricity so you don't go out of business, or the coal prices have to come back down. Well, you can't affect coal prices, so what do? Well, you have to just wait. So that's why they're having all these electricity shortages in China. It's all because the government has stepped in and interfered with the free market. And now it's not beneficial for the power companies to provide that electricity because they're providing it at a loss. Therefore, they're going to do less of the thing that's losing them money. Therefore, they're going to stop providing electricity. Now there's a shortage of electricity in China. It's not that there's a shortage of, people that want electricity. Obviously, people want electricity. They could just raise the price, in a free market, and then eventually people cut back on their electricity consumption, but the company that provides the electricity is still profitable. But that's not what's happening, because the truth is, the more government interferes with, free markets, the less functional they work, the poorer they work. So that's why they're having these problems. So the more the government interferes around the world with these different markets, the more shit's going to fuck up. Think about what happened here in, most places, but in the United States during the CVD thing. Government gave people money because they didn't want the GDP and the economy to collapse. They didn't want the stock market to collapse, whatever. So they gave people money. So then that created an imbalance between people having money to spend and people creating goods, because nobody was going to work creating goods and services, but people still had the same amount, or in some cases more money. So therefore, there was more demand for the goods and services because there was less of them, but there was the same amount or more money. So again, the government interferes, prices start to skyrocket, creates problems, bottleneck, supply chain issues, etc. It's the same thing with inflation. Everybody's like, oh, there's so much inflation. Sure, there's inflation. But if the government didn't do anything, would there be inflation? No, the government is causing the inflation. They want the inflation. It's like the Federal Reserve. We are in a naturally deflationary environment because of population, because of productivity, because of, all these different factors that we always talk about. The government is trying to create inflation. Hence the Federal Reserve. What do they always say? We want inflation. We're trying to get inflation. We have failed to reach our goal of 2% sustained inflation over time. So the government admits, the Federal Reserve admits, they are the ones causing the inflation, and they're causing it intentionally. We want it. And they've brainwashed people into thinking that that's good for them. It's good for you. We're doing it for you. We're inflating things for you. But it's all bullshit. Every time the government interferes with something, they fuck it up. So that's my little rant for today about oil, about electricity, and about how the government is messing all these things up and then trying to act like they don't know why they're getting messed up or what's going on. Government can't do anything well. Free markets, economy, and, basically like companies over governments. Governments suck at everything. Yo, what's going on, Ark? It's good to see you over there. Welcome, brother. So Dow Jones, obviously looking at the daily chart here, what happened? Well, it looks like we're topping out. We now have a pretty big sell-off, came back up, put in a lower high, and then 821 broke down. 200 simple is above the 200 exponential. Looks very weak here. So let's look at our monthly close too. We closed basically at the 8 moving average and then had a little pushback up. We're rolling over on the blue stochastic right here. It looks like it's getting ready to cross. Still well inside the bullish control zone, but let's keep in mind on the monthly, the last time that happened, that was our big ass dump right here for COVID. The time before that happened, that was basically a low, a high, a lower low, a higher low, another high rather, and then the COVID dump. So that was the beginning of the end. And then here, when we left the bullish control zone, that was our 2015 dump. And then the previous time before that, this was our 2011 dump. So, this has always corresponded a hard sell signal with a pretty serious sell-off. Now, we do have our second red histogram. Is it possible we just continue to the upside? Sure, but we're definitely getting potentially towards like topping areas, and that's important to see. Here on the weekly, same thing. We crossed the 821 to the upside, turned green. That was our trend that we wanted to be in. That's what we always talk about. We just want to put our money in the right place at the right time. And then now look, looks like we have closed here and then moved below it on the weekly. That was our weekly close below the 21. So if we cannot get above and stay above 34,500 on the Dow Jones, we will cross these to the downside eventually. And then how long will that last for? How aggressive will the sell-off be? Is it going to take us back to the mean, reversion to the mean, 30,000, 27,000 at the 200 exponential and simple? Well, we don't know, but we have a hard sell signal. We left the bullish control zone. The slope line is now red. We have all red histograms on the weekly, and we're about to get the 821 crossing to the downside. That tells me that we are very, very close to a big sell-off or a long consolidation period. So everything telling me stock markets have likely topped out. And even after we see the signature and it tells us they topped out, there's still a percentage chance that we burst to the upside, put in a new high, destroy everyone's stop losses, get everyone bullish at the absolute top, and then it sells right back off. So it's still possible that we see all-time highs on these assets. Less and less likely, though, as these things unfold. S&P 500, SPY, again, very bearish looking. This is by far the most aggressive sell-off we've had in a while. We broke down from key levels on our pattern right here. We touched our downside target almost perfectly, but in all reality, we're still a little ways away from the 200 exponential and simple. I think 412 is reasonable. And then if we go to our weekly here, again, we have closed now at or below the 21. If we do this long enough, it's going to sell off. It's possible we save price action like we did right here and continue to the upside, but it is important to see we have left the bullish control zone. We now have a hard sell signal. We're below the slope line on the TJD TDMACD, and it is red for the first time since 2020. The CVD dump was the last time we were below the red slope line and it flipped red, or below the slope line and it flipped red. The time before that, when this happened, that was our October 2018 dump right here. The time before that, when that happened, this was our March 2018 dump. I mean, this is literally the signature we see happen when we're getting ready for a dump. Now, it is possible we break below it like this, come back up, retest it, and just continue melting to the upside. But it looks less and less likely as, we've basically had a powerful move. So what we're paying attention to on the weekly is when this 821 crosses to the downside, that's basically our final signal for bearishness, at which point in time you would expect a retest of the previous high and reversion to the mean around like 335 or 3350, something like that. IXIC, Nasdaq, obviously well on its way down to retest the 200 exponential and simple. Had a pretty strong move so far, not unlike these previous two that we saw right here. We obviously saw that coming, not a surprise at all. Again, closing at or below the 21 for the first time. We did pick it up right here and continue to the upside. We did pick it up right here and continue to the upside. But now we're getting, hard sell signal and a retest of the low, hard sell signal and a retest of the low. But here we still had blue slope line the whole way. Now we're below the red slope line and we came up and got rejected here at the all-time high. And we basically showed a bunch of bearish divergence on the weekly telling us, okay, this is unsustainable. So even if we do continue here to the upside, I would expect the third drive to be the big one. And then eventually a retest of the previous all-time high, reversion to the mean, somewhere around the 200 exponential and simple. Where's that going to put us at? Like 10,000. And a lot of these companies inside of the Nasdaq, a lot of these tech companies are already down like 30 to 50%. So if we all of a sudden have a, sector-wide sell-off from 14.5 or, 15,000 down to 10,000, the ones that are already down 30 to 50% or 25% even from their all-time highs, if they lose another, let's say 30% of their value, what does that really look like? Well, they're down big, and that starts looking like a dot-com bubble burst. So, let's not rule these things out here. This is how markets stop. This is how, economies, quote unquote, it's not even really economy. This is how faux economies stop. Faux economies, fake economies, etc. So, we'll see what happens. Monthly, obviously looking bearish. Couple red histograms, all-time highs on the histogram here. And, we're basically about to get the 820 or the stochastic cross to downside. Still well inside the bullish control zone. But once we get that hard sell signal, it just starts to sell off, etc. But we would expect, slinky theory to take place, or like, stair step along the way. It bounces down, the slinky tail comes back up, bounces down to the next step, slinky tail comes up higher, and, we just stair step our way down lower and lower until we carve out a bottom, until we run out of sellers or start getting buyers again. Russell looks like straight up trash still forever. It's always looked like trash and will always probably continue to look like trash. February 2021, this thing has been going sideways the whole time. And look, let's talk about what we were talking about earlier. Come down to 200 exponential and simple. We bounce before we even get to them. Then we put in a lower high. Then we bounce down, touch them again. Same low here again. Get a slightly higher bounce right here. So you're like, oh, that's it. We're bullish, macro bullish. Now we have a higher low right here, but then again, we get another lower high. So this thing looks like it's just squeezing into a smaller range. But while that took place now, we are basically losing the 200 simple. We're getting less and less of a bounce off the 200 simple. So eventually we fall through to the 200 exponential. Then the 200 simple starts acting as resistance instead of support. And then we go into a bear trend. And if you don't believe me, we just look at like the other 100 charts we're going to look at tonight and see that pattern playing out in real time. So Russell 2000 on the weekly now, this has been tightening the range. We're now in between bear. There's nowhere to go. There's nowhere to go for the Russell 2000 now. Okay. So we're either going to flip this back over red and go down, or we're going to flip it, save it in green and go up, but there's nowhere else to go. We can't just literally go sideways and do nothing. I mean, we can, but that's just going to destroy all the options traders. So, but again, on the weekly here, well below the slope line. Slope line is red, all red histograms, barely hanging on to the zero line, and we still have stochastics are trying to cross back to the upside. Blue is, but the blue crossed back here and then got rejected. Russell's trading inside a range. 200 exponential is still on top of the 200 simple on the weekly, but overall looks very weak. And then the monthly again looks like they're about to cross the downside. Bunch of red histograms, barely hanging on to the 8. What happens? We break down to 21. See you under 2,000, Russell. Bye 10%. And that would be a break of our, sideways consolidation inside of this range right here, which it's been going on so long. We've had to extend this out like 30 different times. But yeah, that's our range. And how much longer till we break out of it? Probably forever. We'll probably just go sideways in this forever until, what's going to happen? What'll be the trigger that we break out of it? The one time when we actually break out of it. But until then, we're just going to go sideways because that's just how channels work. So, but it is important too, while we're talking about it, why horizontals are so much more important and so much more reliable than like an ascending or descending channel. In a horizontal, right? There's time is not a factor in this. It's the other way around. We can literally just go sideways in this forever and never break the range. We go sideways for 5 years inside this and never break the range. But if we have an ascending channel or a descending channel, if we were operating inside something like this and we're going inside the channel, well, time is actually our enemy because the longer it takes, the more likely we are to break out of it, or it's going to just keep pushing us down inside the channel. So the fact that this is a horizontal channel tells us time is not a factor. Time can just go sideways forever. So that's where options players get destroyed because we're not in an actual trending market. But now obviously we have pressures from the 200 exponential and simple. There's other stuff to pay attention to, but a sideways or horizontal supports and resistance are much more reliable because time is not a factor in the same way. Oh, let me take a quick drink and we'll keep running through here. Okay, so XLB materials, again, barely hanging on to 200 exponential and simple, 8 and 21 across the downside. Looks weak, and we're basically at the lows. So if we break down from these lows that's going to basically confirm we have a high, we have a low, we have a lower high, and then we just start putting in lower lows. That's a downtrend, and then we'll be below the 200 exponential on simple, which is starting to flip over, bearish if we break down from there for sure. XLC, slightly stronger communication. We have a high right here. We come down. We're paying attention to now, since we've just put in our high, we don't want to start taking out the previous lows, but it's less relevant. So, maybe we come back down here after we hit resistance, come down to 200 exponential on simple, but it's going to look like a buying opportunity at least the first time we come down to it. It will technically be, buying support here until we start putting in lower highs. So this one is, more bullish than most sectors. XLY, consumer discretionary, still looks good. Up here consolidating at the top of the range. We are seeing some bearishness, 200 simple above the 200 exponential. We're seeing some bearish divergence take place. But, at this point in time, we're basically just going sideways in like this range since we broke above the support right here, or we have like a little ascending wedge forming here. But, this is area we would expect to just hold. We have a double support area right here. It's the bottom of our little ascending wedge, and it's also our blue line support right there. So we would expect that to hold, and then possibly even put in a new high. 186, sure. XLE energy, by far the weakest of the sectors, performed pretty good this year. But let's keep in mind, this is one of the only sectors, one of the only charts we look at that is not at new all-time highs. And most of the other charts we look at that are not at new all-time highs are in this sector. So what does that tell you? Underperformer, horrible, horrible sector. Don't even get me started on the green energy sector either, because they look like trash too. At some key resistances right here, this was obviously a bunch of the lows previously, and then obviously we topped out at that same area as well. The longer we consolidate in this area, the more likely we are to break through it. The same way that the more times we hit the 200 exponential on simple, the more likely we are to break down. The same way with the resistance that we're bumping our head on. If you have a little door, it's made out of plywood, and you punch it, maybe don't break through it the first time, but if you punch it again, it's going to get weaker and weaker and weaker and weaker, and then eventually you pull it apart and walk right through, and you broke through the door. No one's going to be impressed depending on how thick the plywood is, but it is what it is. So that's what I look at this as. This is us punching the plywood door. No one's impressed by it. You're still the worst sector in the market, but eventually if you get to the other side, you got some potential to show off then. Maybe you do a flip afterwards and people are like, oh, look, he punched through a plywood door and did a backflip. That's pretty cool. Good job. So that's what we're paying attention to. Is this thing going to impress us? Well, maybe in time, but first it's got to beat down this plywood door and get to the other side so it can do that backflip. So we'll see, but maybe it just fails. Maybe it starts bleeding out and gets a little woozy because, it cut itself a little on the plywood and then it starts going down. And then next thing you know, passes out, starts bleeding out. We'll have to see. We'll have to see what happens. 200 simple above the 200 exponential. My analogies are a little off the wall today, but hopefully you get where I'm coming from. XLF, financial sector, still good overall. Rising rates are going to be strong for what? Probably materials, as we would assume that would make commodities go up in prices. Rising rates going to do well for financials because they make money off of higher interest rates. So we'll pay attention to some of these things. And then alternatively, if the rates start to pull back, maybe financials weaken a little bit, maybe materials weaken a little bit, commodities, etc. Maybe tech regains some of its losses. We're looking at the relationship between these different things and why they're so important. But overall, financial up here consolidating at like the highs, starting to weaken a little bit, but still looks decent. Still one of the better sectors. It is actually still on top of the 821 right here, and they're still green. So again, one of the stronger sectors overall. XLI, industrial, weak. Once we took out the low back here, once we broke down from this area, came back up, retested, failed to get back above it. 821 across the downside, 200 simple above the 200 exponential. Initial bounce. Maybe we bounce back up here again and put in, higher than this, but lower than this high. We'll have to see. We broke down from some key support areas. This was our heart line we were paying attention to. This yellow was the bottom of our channel. This blue is our 200 exponential and simple and a key Fibonacci. So if we break down from this level, where do we expect to come to? Well, the macro heart line down here, and then also this key. Let me extend this out a little bit. Yeah, I might have messed that up a little bit, but that's fine. It's close enough. This key heartline area right here of the big boy channel that we've been operating inside of for like literally a decade. And then we have like our ascending channel we've been inside of for this year, well, almost 2 years now. But now we're breaking down from this level. So the longer we spend around these areas, another lower high rejection, and then we're coming back down here to like 89. At which point in time, we'll be below the 200 exponential and simple, but we'll be looking at that as a potential scalp area for a reactionary bounce, followed by more downtrend. So we'll have to wait and see. But overall, this one looking pretty weak. XLK, tech, probably one of the stronger ones. But again, we have a low right here, and then we put in a high. We don't want to take out that previous low, but it is less relevant. So now we have technically a high, we have a low, then we have a lower high, and now we have a lower low. So we're sort of ending up in like a little downtrend action right here. Does that mean we can't just pick it back up and continue the upside? No, but we're seeing some weakness. 200 exponential and simple. 200 simple is getting ready to cross to the upside. What does that mean? It means we're losing momentum. Bunch of red histograms below the slope line. Definitely starting to show a little bit of weakness over here. Nothing to be alarmed about yet, but we have a target in place for a retest of the previous highs that just happens to line up with 200 exponential and simple at like 143.5. So again, when we come down to it for the first time though, that's going to be a potential buying opportunity for a continuation of the trend, or at least a scalp into weakness followed by lower highs and lower lows. So first time we come down to 200 exponential and simple, it's a buying opportunity. But the more times we come back down to it, the weaker it gets and the less we want to be buying it, because eventually we just roll off that table and then we're in a downtrend. XLP, consumer staples. Again, now we have touched it. This is a perfect example. 200 exponential and simple are bullish right here. The 200 exponential crosses over the 200 simple. We break down, we come up, lower high. That starts showing weakness, but it's still a buying opportunity the first time we come down to it. Then we put in a higher high right here, so it's still a buying opportunity. Come down to it, buy, it puts in a lower low. People start getting a little scared right here, but then we bounce it. Still positive slope. Everything's looking good. New highs, and then we don't even come down to it here, and then we put in a new high again. Looks great. Continuing the strong trend to the upside, and then now here, come down to it again, should technically be a buying opportunity similar to this right here. It's not until we get a bounce and a lower high that we start getting scared on this. So at this point in time, XLP looks like a buy to me. This was our chart that we put into play. We've had in play for quite some time. And this was our buying area off the 200 exponential and simple. This was our buying area off $68 range, from our long-term resistance previously. And this is the bottom of our channel. So even though the initial channel breakout failed, we would expect this to act as support right here. And this was our double top right here. Breakdown, measure move to the heart line. We broke down from that. Still consolidating a downtrend, starting to lose the slope line. But initially, we would expect a bounce back up to a lower high before continuation in the direction of, whatever the trend decides to do. So XLU Utilities, this one gives us, again, another picture of what's going on here. We're starting to get the trend back to the upside. We're seeing all the blues, the 200 exponential and simple. First time we break through it, start to lose the trend, but then we rally, find support here. Then we come up, new high. That's great. We're moving up. First time it's a buying opportunity, new high. Second time we come down to it, starting to look weak, but technically still a buying opportunity. Until we start taking out this low right here, until these start flipping over to the downside, we would expect this to initially at least once come up here and put in a lower high. So we're also seeing basically the bearish control zone very strong, but it looks like the stochastics are getting ready to potentially cross back to the upside. Last two times that happened and we got the buy signal. What happened? Well, this was us moving to the upside powerfully afterwards. This was us moving to the upside powerfully afterwards. So what's likely to happen this time? Cross back to the upside and, new highs. So, and maybe that has to do with nat gas. Maybe it has to do with some of the other utilities. Whatever. We can look at all that stuff and the macro and the fundamentals, but fact of the matter is, this is potentially a buying opportunity off this range. And then if we zoom out and look at the big picture, we have a giant ascending channel. We've been operating the bottom of the channel, threatened the breakout to the downside a couple times. We finally got the breakout of our little descending channel here, hit the measure move perfectly to the upside, had a nice little trade play out, 10% right here, put in a potential double top formation. That same one broke down from the double top, retesting the 200 exponential and simple. And now here we are back at the bottom of the range, back at that potential support. So is this going to be a buying opportunity for us? Is this what we're looking for? Utilities? I mean, I would say yes. I would say yes. Now, does it have to bounce perfectly off the bottom? No, it does not. It does not need to bounce perfectly off the bottom, because look how many times we actually broke down technically from the bottom right here. But I bet if we flip out to like a monthly or something like that, we never actually break out of the bottom. Okay, maybe one month here, but you see how much more reliable that support is on a longer time frame. But essentially we've just been creeping up. This is 2008. This is the utilities in 2008 right here, crisis. So we've been in this channel just crushing it since 2008. So now if we break out of the channel, we get the measure move, it takes us back reversion to the mean, back down at 45 bucks. That's a pretty big hit. But what's the likelihood of that happening? Well, not very good. If it hasn't broken out of the channel, since 2008, it's probably not going to break out now, with the exception, obviously, of that little scare tactic. But we see how aggressively got bought back up. So oh yeah, the thirst quencher. But overall, got to be careful with this one, but doesn't look bad. Not as bad as a lot of these other ones do. And then you also look at like seasonal and cyclical patterns as well. Going into the winter, a lot of the utilities tend to go up in price, like, natural gas and etc. Like, depending where you are, and obviously electricity seasonal in some places, gasoline seasonal around the holidays, gets more expensive because more people are traveling for like Christmas, or what else is around then, Hanukkah, whatever other holidays there are. Real estate sector showing the first and strongest weakness we've seen, basically since we resumed this uptrend to the upside, off of the 200 exponential and simple. Again, we started to flip them back over here. There was a little indecision in the markets right here, and then started to bounce them. Took out the high right here. That was crucial. Came back down. That's a buying opportunity because we have 200 exponential and simple. Blue slope to the upside. Broke through to a new high, and we're coming down to retest. That's a buying opportunity all day. After that, boom, crushing. And now, if we get back down to it again, what is that going to be? Probably a buying opportunity. We still have 200 exponential above 200 simple. This is strong. We're inside the bearish control zone. Bunch of red histograms, but stronger than most sectors are. And a retest of the 200 exponential and simple back here would be basically a retest of this high and the previous all-time high back here. Again, that's going to look like a buying opportunity to me. And then if we just slap on our moves right here, obviously, that's the area we're looking to buy off of, 200 exponential and simple, and potentially the previous all-time high. So, and then if we look at transportation next, this is the exact situation we talk about where we start to put in the highs, break down, 200 simple starts creeping above the 200 exponential. First time it's a buy, comes back up here, and now we need to pay attention to, does it put in a lower high and then break down again and put in a lower low? Because that is the beginning of the macro downtrend. So while we're still getting picked up by 200 simple right here, we're still coming back up. This kind of looks like Tesla. Put in like that little channel to the upside, coming back up to key resistance or whatever. But we're basically just getting walked up by the 200 simple. If we do that long enough and we don't powerfully break to the upside, we're going to break to the downside. It's just what happens. So, but again, this thing chopped around sideways forever and then had that capitulation dump and then broke back up and started back into its uptrend. If this starts to just chop around forever like this, eventually we're going to get that capitulation dump again, just because that's what it likes to do. So Jets looks weak. Again, we basically were in a massive downtrend on this since like 2008 or whatever. This thing, maybe not 2008, 2018, was when we topped out, went sideways to down forever, and then capitulation dump, and it's like, oh, this is going to kill the airplane industry. Oh, this is horrible. Well, it was already dead, right? It was already dead for 3 years. And then all the money they got, everything that's happened, and we're not even at all-time highs again. This looks so weak to me. It looks terribly, terribly weak. We lost slope on the 200 exponential. We're back above it now. It's kind of creeping. 200 simple. We lost it a couple times briefly. We tried to push back up it right here. I think we put in a new all-time high and this rolls over. If I'm wrong, though, this will consolidate for a little bit, and then we'll start pushing up. And then next thing you know, all of a sudden, airplane industry is just crushing it. Do I think that's going to happen fundamentally, technically? No, I do not. But it's possible, but it's unlikely. There's been some legitimate changes in these industries, and I doubt if we'll ever see them come back. As long as there's restrictions, as long as it's hard to get a passport because they're taking forever, or there's weird, doctor-related laws or government-related health risk laws or anything like that, we're not going to see it pick back up. Because some people are going to say, well, I'm not going to do it. So there's 33% of your people that are potentially going to internationally travel, not going to be traveling anymore if they don't get the big V. And then on top of that, you've got a bunch of business people used to fly across the country to shake hands and drink sake or across the world or whatever. They're not going to do it. They're just going to jump on Zoom. They don't even have to put on pants. I mean, think about all these different macro changes that tell you probably international travel never going to come back. A lot of people just bought a brand new vehicle because they got a low interest rate and all of a sudden they decided, I don't want to be on trains. I don't want to be in planes. I don't want to be next to these dirty, unV'd people or whatever. I'm not saying they're that. I'm saying that's how people think. They all of a sudden don't want to worry about that. Maybe you got something else. Maybe you don't trim your fingernails. You got dirt under them. And they think, man, people do kind of gross me out, actually, now that I realize it. Maybe they don't want to wear a mask. So they don't want to get on it. Maybe they didn't get the V, so they don't want to put the back, so they don't want to get on the plane because they don't want to risk their own family. Maybe they have a family member that has a medical risk that tells them, I don't want to get random things shot into my body. So it's not worth taking the chance. So we'll just drive in our own little pod in a car and not worry about that. So there's a lot of macro things that are messing with some of this stuff here. But again, hail, we're seeing very weakness here. This is a giant descending triangle. We're below 200 simple, barely hanging on to 200 exponential. Slope on 200 exponential is flipped to the downside. So what is this telling us? Transportation, rental car industry is breaking down. It's looking weak. And then this is where we really start to get the red alarms. You know, the old red alert sirens going off. UPS looks bad. We have a massive gap down here. Breakdown when they said we're not expecting demand to pick up. We're getting weak. 821 crossing the downside. We're now below the 200 exponential. 200 exponential rolling over. We're at, below the 200 simple. It's starting to look like it's about to roll over here soon. We've got some support below our heads here. Maybe we get a bounce back up. Probably going to be to a lower high because here we had a high, a low, a lower high, a lower low, a lower high, a lower low. So what's probably going to happen? Eventually we're going to get another bounce back up here. Slinky theory. Okay. Slinky on the first stair. The back end of the slinky comes up higher, but not as high as the initial one. Then slinky on the next stair. The back end of the slinky comes back up. Boom. That's that slinky theory playing out, ladies and gentlemen. That's that downtrend. That slinky dinky. That little metal spring on the stairs. FDX, FedEx, looking like it's about to go out of business over here. Maybe not quite that extreme, but looks pretty damn bad to me. We got the high back here. We have a higher high here. Looks good. Everything's great. Starts rolling over 200 simple above the 200 exponential. Breakdown to it. Little gap down here. Can't even come back up and fill the gap. Get rejected on 200 simple. Start capitulating. Capitulating to the downside. Gap down right here on, whatever. Whatever, man. This is terrible. 8 and 21. Downside. 200 exponential on simple. Rolling over. FedEx looks like trash. And then when we look at the big boy chart on FedEx, what does this tell us? We're in a giant megaphone pattern. We put a high here, then a low, then a higher high. Okay, that's great. Uptrend, right? Nope, lower low. So now what? Oh, it's a megaphone pattern, giant neutral pattern. Higher high again. Oh, that's great. Uptrend, right? Nope. So what's probably going to happen here? Probably going to come down here and put in a lower low. And when that happens, Amazon's probably just going to buy FedEx and they're going to own them. And it's going to be called Amazon X or Fedazon or just straight up Amazon F and X. I don't even know what they'll call it. I mean, if they use one of those names, though, I do expect to get kickbacks. But in all reality, this thing probably coming back down to the heart line, somewhere around like 180. And then after that, probably see a bounce, corresponds with like Christmas season, something like that. I would imagine at some point in time, we're going to retest like 238. When's it going to happen? It doesn't look good right now. This was the last time we broke down and went into this pattern. It was from August 2015 until we broke back up was April 2016. So, almost a year in a downtrend. But we did get that retest rejection. Okay. Then it happened again here in September 2018. And then what happened? That was till July of 2020. Almost 2 years downtrend right here. And then again, back to the upside. And look how many times we got rejected. Could not get this cross back to the upside. So at some point in time, we'll get a back test, probably somewhere around that resistance, 200 exponential on simple, and then further rejection. This will look like an initial buying opportunity. Come back up, rejected, slinky theory in full effect. Boing, 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 boing. Till we run out of buyers or Amazon steps in and buys the whole damn thing. MGM, new highs here, basically, this looks bullish, and then a lot of the other casinos are not doing great because of China FUD or whatever. It's not even just like, oh, people are FUDing China. It's like, no, China actually looks like shit right now. They're FUDing themselves. So I would expect the casinos that do well to do more well, betterer. Yeah, something like that. Betterer and more well than the ones that are not, if that makes sense. 200 simple above the 200 exponential though. Got to be careful here. Potential area that it would top out, but longer we spend above this Fibonacci, more likely we are to break to the upside. Or actually, this was the giant channel that we were operating inside of. Might have to zoom out on this one. Oh no, that was our macro Fibonacci. Okay, yeah. So the previous all-time high was at $100, and then we went down to zero, $1.84, and now we're just back on the upside. But 200 exponential and simple looks good. 8 and 21 looks good. Above that key Fibonacci at 786. Macro target up here at the 886, $65. Then potentially retest the all-time highs at $100. Does that happen though, or do we come down first? Well, I don't know, but the truth is on this one, for me, we're right smack dab in the middle of the range. I think we're either going to come back down here and retest. That'll probably be a buying opportunity, or we're going to come up here and that's going to be resistance, and that'll probably be a selling opportunity. But we're right smack dab in the middle, so it's really of no use to me at the time. Momentum wise, bullish control zone. It's bullish momentum wise, but I mean, you can look at the short term chart and tell that. But we are losing a little bit of strength here, so. All right, what's going on in the chat, man? Say what's up. Make sure you like, subscribe, blah, 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 blah. If you're just tuning in, remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Let's jump into the DXY next. Not going to go into depth on this one because I just did that long, in-depth video. But basically, downtrend, retest for resistance, broke back above it, 200 exponential and simple, moving to the upside, higher highs on price action right here, bullish. We've seen a little bit of weakness right now, but we're still well above the 8 and 21, 200 exponential and simple crossing the upside. This looks to me like the beginning of a long-term uptrend. On the weekly, we're retesting the 200 exponential right now, running into some resistance exactly as expected. I would expect us to come back down and find support around 93 and then retest the 200 simple. It's possible we just burst through here and come right up to the 200 simple as well. We do have a technical breakout from resistance here in white, so it's not unrealistic to think this measure move plays out, but this reverse slinky theory, we're basically moving up, coming down less, moving up more, coming down less, moving up more, just taking the stairs up. So momentum in our favor here. We are seeing the hard sell signal on the weekly, and then finally on our monthly chart, we basically have bounced to 200 exponential. This is us changing the trend. We were in a downtrend for a long time. We broke through. We retested as support. It acted as support. We came up to a lower high. I don't know, man. This looks bad. It looks like it's going to fail. And then look, higher low now too. So now we're on top of the 200 exponential and simple. We flipped them both to the upside, and we're putting in higher low support off the 200 exponential. So more likely than not, next thing that's going to happen is a higher high. So I do expect over time to take out on a monthly close 102. How long is that going to take? Could take a while. Because from the retest right here was February 2018. Our lower high that we put in was March 2020. So we're talking about 2 years to get back up to that point. So if we're going to come back up there again, this maybe takes 2 years, and we're only 6 months in. So 18 months it could take before we get up there. This stuff's not just going to happen overnight, but we do have a hard buy signal coming to the bearish control zone, all green histograms at the slope line now, where we would expect some resistance similar to this, but I do think it will break through. I think it'll break above the zero line, and I think it will slowly but surely flip that slope line over blue. I think the DXY is going higher. But we've been positioned for this. Everybody else is just tuning in because they're like, wait a minute, the dollar's not going to zero. It's not getting weaker. Oh, none of this makes any sense. There's going to be deflation. Listen to how everybody all of a sudden changing their tune. We took advantage of the inflation, commodity bull run, all that good stuff, crypto bull run, all that good stuff. We took advantage of the, situation with the dollar by de-risking from these various stocks and whatnot and cryptocurrencies. And now we're going to take advantage once again if the dollar starts to have a prolonged pullback over time or continues to the upside. We just position ahead of time, and then we let all the little lemmings on the boat afterwards, and we hold out our hand and we charge them to get on the boat with us. And then when we get off the boat, we leave them with our luggage, and we say, we'll be right back for that. Just wait right there. And then the boat sinks, and then after it sinks and the luggage floats back up to the top, we just scoop it out of the water for free, and then we're back in the game. And then when they want to come back on the main boat because their boat sank, we just charge them an admission fee once again. That's how it works, okay? That's the difference between being ahead of the trend versus being always that guy who's in the water drowning, stuck with the luggage that has to leave it behind and pay admission to get back on the boat. Tesla, we talked about this key area. This is a key area. If we break through this area, I think we move to the upside, possibly even new all-time highs. This is all, call buying activity on Tesla. Honestly, I'm surprised we even got back up this high, but we are operating inside this channel. We are at a key resistance. If we take out this high right here, there's a good possibility that we continue back up to all-time highs. Blows my mind. I think Tesla is extremely, extremely overvalued, but it is what it is. Love Tesla long run, but you know, their solar operation failed. They basically like chalked that up as a big L and got out of the solar game now. You know, they beat the estimates on cars. They delivered more cars. So I guess that's good, but I don't know. I just don't see it. I don't see the bullishness the same way other people do. They're opening up gigafactories. They're making cars. Well, I mean, they're months and months and months behind on everything. What's up with the Cybertruck? I thought that was about to be out. A bunch of people like ordered Tesla, still haven't got them yet. I don't know. I don't know. Uber lost to 200 exponential on simple, broke down below it. This is a retest for resistance. If this acts as resistance, if we cannot save the trend right here, you know, this is going to powerfully break to the downside. It's in a downtrend right now. We basically found support off a key level. Uber said one day they might make money. People got bullish. I don't think so. I do not think so. Pinterest looks extremely weak. New lows. I would expect at some point in time to try to come back up and retest 200 exponential and simple, close the gap. You know, where's that go? From $50 to $65, something like that. Again, very weak. Very weak. Wish, I think, went out of business. $5.35. New lows. I would expect it to just keep putting in new lows till it doesn't. Trying to carve out a bottom, but consistently putting in new lows. Airbnb, weak. Retested the 200 exponential and simple. It's back on top of the 200 exponential and simple here for the first time as they're just creating. So I guess it's starting to show some strength. Going to be tough to get through this area. I think if it breaks down here and retests the 200 exponential and simple and finds support, maintain support, I think this thing will probably go to new all-time highs. Yeah, I mean, it actually is not that weak. It's actually better than a lot of other charts are. Bumble, you know, just filling out that triangle still. Doing nothing. It really needs to break above $58 before I see anything here. It's basically just doing nothing. Dead money. Baidu looks terrible. 200 exponential and simple rolling over to the downside. Looks absolutely terrible. New lows probably in its near future. Baba looks even worse. 200 exponential and simple. Slope to the downside. Looks very, very weak. You know, just looks like it's going to keep bleeding out. I see no signs of life from these Chinese stocks. TME, 10-cent music at all-time lows, just bleeding out. I see no strength. Diddy retesting the lows as expected. I expect it to hit down here slightly lower, at which point in time maybe it tries to push to the upside. It looks like it's trying to flip this back over, but weak. BZ, much stronger. It is trying to maintain this blue level right here at $36. If it does it long enough, I think it bursts to the upside. Whatever it's doing it better than all the rest of China is. JD.com looks terrible. You know, came back up for the rejection. Could not get back above the 200 simple. 200 exponential flipped over slightly and then got rejected. Headed to new lows, I think. I think we're headed down to 62. And then after that, you know, just dead cat bounce slinky theory in effect. Neo looks terrible. 200 exponential and simple rolling over. You know, again, very, very weak. China looks so weak. EDU, trying to carve out a bottom right here. I'm actually starting to kind of like how this looks. We're getting the hard buy signal coming out of the bearish control zone. We're above the blue slope line, a bunch of green histograms. If this thing bursts back to the upside, if it gets back above 250, we have the massive gap at like 582. So I do have a small position on this at the moment. I may add to it if we get the 821 cross, but I have a feeling when we do, it's going to be, you know, it's going to go up 150% or something like that, like in a candle or two. But again, scalp, not looking to just like invest in anything Chinese right now. Peloton looks terrible, as we discussed, headed back down here, probably going to retest and take out the lows. Again, high, low, retest, try to save the trend, lower high, fails, breakdown, you know, comes back up again, gets rejected, and then it's going much, much lower. Probably going all the way out of business. Not literally, but Peloton's trash. It's like the what is that called? The not Nautica, Nordic track. It's like the Nordic track of like our generation. TSM looks weak. Barely hanging on to the 200 exponential and simple. Broke down from the 200 simple, 200 exponential flipping over. You know, chopping sideways for so long here. Probably just going to take a big capitulation hit. What's that going to line up with? Probably China like going full land war, like invading them or bombing them or something. Probably going to be some kind of FUD news, but the chart's been saying it for a while. Intel, terrible, triple bearish divergence on the monthly, below the 200 exponential and simple. Look, this thing looks like it just wants to let go. It looks like it's going to $40 soon. Nvidia starting to show some weakness here. 821 crossing down. I mean, this is the weakest Nvidia has looked in a while. It's a little ways away from the 200 exponential and simple. Stronger than most, but looks like it's got a little something coming its way and not something to the upside. AMD, same thing. Looks weak here. Stronger than most, but looks like it wants to roll over here. 200 exponential back on top of the 200 simple, though. That's big for that breakout. So maybe it consolidates here. Descending triangle. Breaks down. Finds support. And then continues to the upside. VanEck Semiconductor ETF. SMH. Retesting the breakout over here. Finding some support. Maybe see some continuation back to the upside. Again, much stronger than most, but starting to show some weakness. Semiconductor space in general, much stronger than most, but showing some weakness. ARKK, record outflows. Cathie Wood is trash. She's starting to just ramble on like a crazy woman. I don't even know what she's talking about anymore with the whale blubber. And like, I was wrong about oil, and then it went to new all-time highs, but I didn't admit it till 10 years later. Like, I don't know what she's talking about. She's losing her goddamn mind. So she doesn't know how to handle it. I bet. Honestly, I think probably right now she's spending probably about 8 to 15% of her waking hours just sobbing horribly, just crying nonstop. She's probably accepted quite a few different saviors of mankind, various religions. I imagine she's praying a lot. She probably has some kind of sage that she's burning, and maybe selling her soul to try to all-time highs again. I don't know. That's speculation. I can't vouch for that, but she's definitely been drinking some blubber, if you know what I'm saying. She's losing her damn mind. She probably is or has been an alcoholic. I think she'll probably take up weed soon if she hasn't already. It's not looking good for ARK. Let's put it that way. 200 exponential and simple, rolling over, negative slope, record outflows, coming back down to the lows. Hey, Cathie, I hope you're not levered up, because you can be in big trouble soon as these outflows start to just pour out. Have not made anyone money in a year. You're a useless human being. ARKF looks slightly better. At least the 200 simple has not rolled over red yet, but doesn't look good, Cathie. Doesn't look good. Better get some knee pads, because you'll be on those knees praying for a while, if you know what I'm saying. Skills, SKLZ, 200 simple and exponential down, all-time lows, broke down from that. This thing could just let go at any point in time. Goes to $1. Maybe not. That might be an exaggeration, but it looks terrible. Teladoc, horrible. 200 exponential and simple downtrend. Bear market, garbage. Palantir, barely hanging on right here. 200 simple started rolling back over to the downside. If it breaks below 200 exponential, it's going to be right behind it. This thing did slightly put in a higher high, but it does not look good. It looks better than most because at least it's on top of its moving averages, but these markets look like they're just ready to let go. UBX, Unity, terrible. Back down here at the lows. If it loses this level, it goes straight from $2.95 to $0. Not literally, but you know what I mean. Unity Bio. Oh no, that was Unity Biotech. This is Unity Software. 200 exponential slope to the upside, 200 simple slope to the downside. This is a weird situation. I think we're going to come back down here and retest. 116 should hold at least the first time. It looks like this wants to start going up here, but was that just it trying to close this gap and then it's going to go down? Probably. All the markets look terrible right now. And in all reality, anything that's in Queen Cathie's funds, as these massive outflows come from her funds, as ARK crashes, as she realizes she is not the female Noah, she is not the savior of mankind, and the flood is coming and there's a big hole in the bottom of her boat. As that happens, she is going to crash all of the stocks inside of her funds, because she's going to have to, the way her funds work, her actively managed funds work, is she's going to have to sell off these things to keep her portfolio balanced. So the ones that don't crash are going to become too large of a portfolio, so they're going to have to get sold off, or the fund's going to sell off, and then they're going to rebalance, and then she's going to crash a bunch of these other stocks. So good companies are going to suffer because of Cathie and her idiocracy. Zillow looks terrible. 200 exponential and simple rolling over to the downside. Looks like trash. If it loses this level, it's going to keep capitulating. It's literally selling houses at a loss right now consistently. It could easily lose 25, 30% quick too. Very quick. Another gap down scenario, Bed Bath & Beyond style. Corsair, trash, 200 exponential and simple rolling over. Looks like it's getting ready to lose these levels. Corsair going to like $21 if it can't hang on here. Bear market. All these things are in a bear market. Zoom, bear market, been in a bear market, hasn't done anything forever. Literally the sky's the limit, but opposite. If this thing loses 234, there's nothing holding it up. If this could literally go to $100. I mean, God, I don't even know how anybody still has any to sell at this point in time. Square, I guess they were buying the dip, but the dip took a dip. We can take a break here real shortly. Square, hanging on to 200 exponential and simple. Been going sideways forever. Looks okay. PayPal looks better. Okay. Barely hanging on 200 exponential and simple. eBay, probably one of the better charts, honestly, at this point in time. Broke up from some key levels. Looks like it wants to come back down and retest them. I would expect it to break down, find support, and then just cruise back to the upside. We basically hit our target on this one. 20-something% move to the upside on the breakout off of the retest. So, but we'll see what happens with eBay. I can't imagine it keeps going up, though. I think, honestly, people are running out of money just in general. So, but who knows? Maybe there's a STIMMY on the hills. STIMMY coming. Snapchat. I think if people get a STIMMY, maybe eBay and PayPal and them start doing well again. But I mean, I think the economy is much worse than people realize right now. Snapchat had that breakup, came back down, sold it straight back off. I really think this is coming down here to fill the gap. So $63. I think this was a massive short squeeze, which was warranted because honestly, I was thinking about shorting this. Apple showing some weakness for the first time in a long time. At support, I think anything that hasn't retested 200 exponential and simple going to retest them. 134. Everything looks weak. Amazon at the 200 exponential and simple made nobody any money in so long. Probably going to come down to like 3,000. I think we'll be able to get Amazon under $3,000 very soon. Facebook looking weak. Getting in trouble now. There's all kind of regulatory stuff. They're like, yeah, it's okay. We're ruining kids' lives, but we are making money. So we did know it was bad for their health. Their mental health, but we are making money, so let's figure out how we can get this cult of kids to, pay us. We can collect data on them and sell it. What a trash bag company. Google looks weak for the first time this whole trend. This is by far the weakest we've seen Google act, since basically September 2020. So, a year of just melting up. Still stronger than most, though. This is probably one of, if not the best chart we've looked at. 2,400, not out of the cards, though. Last one, and we're going to take a break. Netflix at new all-time highs after going sideways forever. I was wrong about Netflix. I said I did not think it was going to go anywhere, but let's be careful this doesn't end up being a double top. I don't see it. I don't have Netflix, but maybe they've got something going on I don't know about. I don't know. But yeah, let's take a quick break, take 5, and we will continue on with our cryptocurrency and commodities. All right, let's get back into it. If you are just tuning in, remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Honkiness says treasuries should eventually go up with deflation, right? That could go either way, man. There's a lot of other factors involved, but essentially, if we just break it down to the like absolute fundamentals, what is a treasury? A treasury is a promise of cash. So if the DXY, if the dollar over time goes up, you could argue that therefore, promissory notes denominated in dollars should go up as well. So theoretically, yes. But as the federal funds rate goes up, that will then put pressure on treasuries, because if the treasuries are already extremely high valued at a low rate, and then you can take that cash that you were using in treasuries and you get a higher rate somewhere else, why wouldn't you just sell those treasuries and then turn around somewhere else and get a higher rate? So the argument works in some senses because of deflation, because of cash, but at the same time, because the market has already priced in the value of that money, because it's so hard to get, a rate and to get basically risk-free return, which is essentially what you consider a U.S. Treasury. It's risk-free return. That's why people are willing to take such a small return, is because there's very little risk associated with it as well. Like for a U.S. Treasury versus like, just putting your money in a bank account, let's say. But there's so many other factors as well. If you can turn around, if literally tomorrow the Fed changed the funds rate or whatever, and all of a sudden let's say the Treasury just started, hypothetically, let's say tomorrow, crazy Yellen just came out and said, okay, the federal government wants to raise money because we're tired of being out of money. So we're just going to issue a bunch of treasuries at 5% interest. What's that going to do? All the old treasuries, all the other treasuries that have a lower than 5% interest are going to sell off massively, because people are going to run for the new treasuries and buy them because they get a 5% interest. So if there's some other way that you can get very little risk but higher return, that will cause treasuries to sell off massively. Because right now, half the people are in treasuries for the risk-free return, and the other half of the people are in treasuries for like safety. So there's a lot of factors to it. I do not necessarily think treasuries will be a good investment in the future. In my opinion, treasuries are double risky right now. There's no reason, in my opinion, to be in bonds right now. There's actually negative reasons. If you're in a bond, the bonds are obviously overpriced. They're at extreme highs. So it's already a bad situation. And then everything that's coming in the future, the three different steps of what's going to happen in the future, guaranteed or theoretically at some point in time, the Fed's going to buy less treasuries. That's down pressure on the price of treasuries, right? Because there's less buyers. Even if the same other buyers are there, if the Fed buys less every month during the taper, then that's going to cause, pressure on the price of treasuries, as there's less people buying, but still the same amount of treasuries coming online, like new treasuries. So less buyers, same amount of demand, price goes down. And then on top of that, at some point in time, the Fed is going to theoretically, hypothetically, going to decrease its balance sheet. So they're going to start selling off all the treasuries that they bought. So that's double pressure. Now they're not going to be buying treasuries, plus they're going to be selling treasuries. So that's double bad for the price of treasuries. And then on top of that, the third pressure is, at some point in time, the Fed is going to theoretically raise the Fed funds rate as well. So that's going to cause pressure on the price of treasuries, because people are going to go back somewhere else to get those same yields because they're not getting them from treasuries. So in my opinion, everything about a treasury right now that it's supposed to be is the opposite. You get literally nothing. They don't even beat inflation. You barely get any interest on them. So you want to lock up your money for 10 or 20 or 30 years for some pathetic little rate, when the likelihood is that all you have to do is just wait a little longer and you can lock up that same money for the same amount or less time and get more for it. Just everything that I see right now pushes down on treasuries. And then on top of that, they're extremely overpriced. So you're going to buy something that's extremely overpriced that basically gives you nothing with an extremely high risk of it either going down in price or giving you less than what you could just take that for and put it somewhere else. Everything about treasuries right now just is terrible to me. But it's not like this just happened overnight. Bonds have been in a 40-year bull market. Rates have been going to zero as bond prices go through the roof. So, it's not like it's just some surprise or anything. But again, that's just my opinion. Bitcoin futures, we'll jump into crypto here. Futures chart, basically moved up on Friday at resistance above the 200 exponential on simple. Had a nice little bullish pop right here. Hard buy signal. Blue slope line looks like it wants to flip over red. I imagine we'll get green histogram come back up. It will act theoretically as resistance and roll over. It is possible we don't, though. Maybe we go to a new high right here. Maybe we put in divergence. I mean, it's tough to tell right now. This is obviously a bullish move. We were able to capture the majority of it with our little trade setup. It was no surprise, obviously, as I don't think I have anything drawn on this chart, but I can just put real quick here the trade setup that I displayed in the group. What do I want? What do I want? I want the channel tool. God damn. Why can't I think? I've gone full. Oh, I don't even want to say that word anymore. Why can't I think where the damn channel tool is at? Oh, God. Oh, man. It's been a long life. This is basically what I was looking at. Something like this. We're basically in a descending channel. Theoretically, when we get the break, we get the measure move of that channel. So, and then if we just switch over to the 4-hour, you can see exactly what I was looking at and the trade setup that I displayed. Unfortunately, I did not give a ton of notice for this trade setup. But, that's why you're in the group, is so you can be paying attention for when I do post something up. But that was basically the move that I had put in the trade setup right there. Measure move of the channel break itself. Depending on how you're looking at this, what time frame, etc. You could have had it slightly different than that. Maybe something a little more like this. But as far as I was concerned, as soon as we came up here and closed outside of the channel, as soon as we basically got this close or this close up here outside the channel, either way you looked at it, higher than this right here, it told us we were probably going to get the continuation of the measure move. So when it all worked out, it worked out to basically an entry around this area and then the potential target of the measure move just under 15% with a potential breakdown if we took out that low right there of, I think I had like 4% or something like that in the chat. So basically the Discord setup was like, it was about a 4-to-1 risk reward ratio with a 15% potential to the upside and 4% potential stop loss. Can't argue with that. If you're, look at it like this, if you're trading $1,000 and it goes up 10%, you make $100 and you pay for the indicator and the group. So can't really beat that. I'm always just looking for like nice little simple setups like that. And again, not only do I show off the setup, but I explain why I took it, why I put my stop loss where I did, where my target is, what I expect to happen. I already took profits on this setup as we started consolidating and showing some weakness along these areas as well. So does not mean we can't just continue to the upside, but I de-risk off the trade, lock those profits in the bank, and then I can move them into like some shitcoin or something else instead. Or whatever, gold if it looks like it's going to break out, etc. But we're at elevated levels, obviously. This looks very tired. So here's our Coinbase chart, traditional market, Bitcoin. Obviously topped out. We came up here. We have this high right here on price action. And now here we are. We're paying attention to, does this top out right here and come down? No divergence in play. What are we looking at? So, starting to see a little bit of divergence playing out right here. Here's our last green histogram at the top right here. Here is some green histograms right here. Quite a few of them. And obviously, much higher than right there with much lower price action. So MACD is showing some potential divergence. Got to be careful on that one. And then again, if we look at this point right here, we have a much higher point right here between those 2 points. If we look at this point right here to this point right here, we have much lower between those 2 points. And then if we look at the actual price action here, we see, obviously this is our lower high right here and then a higher high. That's fine. No divergence there. But now if we look at this high right here to this high right here, and this high right here to this high right here, we have a higher high on price action, or on RSI right here, but we have the same high on price action right here. So again, that's a different form of bearish divergence. Now what could happen right here? This could break to the upside, take out that high right there, and then it would make sense that the RSI is higher here and the price is higher here, and that is not divergence. But as of now, we're running into resistance right here, and we're potentially seeing a setup for divergence. So we have the MACD displaying, you know, divergence, obviously between this point where it didn't even make it to the green right here, but definitely between these 2 points. And then we have the RSI, you know, between this point and this point, no divergence, but between this point and this point, potentially divergence. And then obviously we have our Stochs doing, you know, similar to what the RSI is doing right here, where we have the same high on price action here, but we have a much higher high on the stochastics here. So what is that telling us? There's a divergence between the amount of energy and the movements in price action. So whatever the divergence is unlikely to be sustainable over time. So in this case, it's bearish divergence. So we need to be careful here. Does not mean it's game over or anything like that. But now if we switch over to the weekly, we can see something else going on here that in my opinion it's notable. You know, we basically are seeing some of the price action and some of the indicator oscillators rolling over. We have this high right here, you know, and then our previous high back here. This was our cross and then sell off aggressively to the downside. So far, we're saving this price action here, but if we see the cross right here, it's going to tell us there's probably going to be a sell off. And then if we see our little peak here in green, and then our lower peak right here, the bright green, corresponding right here in green, corresponding right here in green, does not look bad. If we see the peak right here, does not look bad, does not look bad. You know, everything looks okay right now. But then if we look at the weekly between the macro peak here and the macro peak back here, this was our high, you know, corresponding to basically this peak right here. And now we are much higher than that previous high. Actually, we're higher than all of our previous highs right here on the stochastics. But price action is much lower. So we need to be careful. Once again, we're seeing some bearish divergence developing on some of these indicator oscillators on different time frames. Which, you know, best case scenario, we don't see any divergence and everything lines up and we just continue to the upside. Worst case, you know, one or two things give us a little canary in the coal mine and tell us, hey, be cautious here. Oh, and there goes that one. So it looks like we're not looking at that chart. Sorry, hang on. I'll pull. Let me pull up a new Bitcoin chart. I accidentally clicked on the X. So no Bitcoin for you. I subconsciously bailed on Bitcoin. USDT. No, we don't want to look at that. Euro. Man, I remember when you just go to TradingView back in the day and there was like 4 crypto charts you could pull up. Now it's like 46,000. I go to Bitcoin. I don't even recognize the name of most of the exchanges. Ridiculous. Okay, so Bitcoin Daily. This is a Coinbase chart right here. So this important move right here was a bounce off the 200 exponential. The same way we bounced the 200 exponential right here. We bounced it the first time. We get a high. Come back down, bounce it again at a higher low. That's good. So now what happens? We want to see a higher high here as well. If we don't see a higher high, it's going to look like, you know, basically like a flag or a triangle pattern. You know, if we do see a higher high, it's bullish. If we come down and put in a lower low, it's potentially bearish. We don't know right now though. We do know the 200 simple has rolled to the downside. The 200 exponential is back to the upside and we're above both of them. So if we just go sideways here long enough, this is going to look okay to potentially bullish. But again, we have to be very careful because, you know, we're at a decision point right here. You know, the market has not quite made up its mind yet. There's a bunch of Michael Saylors out there buying the dip. There's a bunch of cult members buying the dip. So if enough people get into the cult, if there's still people that will join the crypto cult, we can still go to the upside. It's not over yet. It doesn't have to be the end. But the question is, are there enough new cult members? Is there enough new money flowing into the space? Because if there's not, we're going to go into a bear market. And it's all but guaranteed at this point in time. If we don't see more buyers coming into the space, we're going into a bear market. If we do, we could potentially fight it. And then again, lower high, you know, lower high, looks okay. Saving the trend here. You know, that weekly close was strong. That was good. That was what Bitcoin needed. But why didn't it do that on the monthly? That's what really blows my mind. You know, still got the hard sell, bunch of red histograms. I mean, we're hanging on to moving averages. You know, that was a strong weekly close. We really needed that to like hang on to crypto prices, honestly. Ethereum looks okay. Hard buy signal. 200 simple is above the 200 exponential. You know, still below the red slope line. Seeing some green, crossing that 821 back to the upside. Again, definitely some potential here. Same type of pattern. You know, we have basically a little channel. I don't know what I even have drawn on this chart. Okay, yeah, so I had something like this. You know, like looking at it now, I would say probably something like that would be a little more reasonable. But yeah, you know, basically we get the cross. We're back on top. There's definitely some potential for upside movement there. I don't think this was like a big surprise. But, you know, in all reality, the best way to trade altcoins, in my opinion, is to just trade Bitcoin and then just buy like trash bag altcoins. ETH Bitcoin chart, no surprises here. Trying to cross back to the upside. You know, Ethereum's not exactly performing phenomenally well since this little like breakout here. It's actually been performing kind of weak. Matter of fact, I would probably look at like something like this and say that once we broke down from this level, we'll probably come back up and retest it, and it will act as resistance. So, but again, 200 exponential is still on top of the 200 simple. There's still something here. Ethereum's not like dead yet or anything. FTT, you know, looks okay. All-time high, came back down. You know, found some support around these levels. Trying to cross the 821 back to the upside on the daily, but has not done it yet. There's a bunch of resistance through this area. The first all-time high, and then this little series of all-time highs here. We are getting the hard buy signal. Bunch of green histograms. Trying to gain some momentum back to the upside. Again, just going to do what Bitcoin does, though. Next target, I think, will be the highs right here, though. If we can get a pull back up to like 61, there's definitely some potential there. If we look at a couple of the drawing tools, let's start with this one right here. That high to this low. I'm going to make that a little brighter. The previous all-time high to low right there, and then we came up and topped perfectly at the 1.236, and then we came back down, retested the 786 right here. Now we're retesting the 886. So if we break down from this level, I would expect us to hit the 618, which is a 200 exponential and simple, right around 42.25. If we break up from this level, I would expect resistance at the 1 or the previous all-time high, which is what I just said at the $64 level. If we break through that $64 level, you know, very likely just going to march our way up to a new all-time high. Not saying that's a high probability, but definitely a possibility and target. Chain link. Oh, did I? Yeah, and 200 simple is above the 200 exponential, but overall looks decent, and the 821 potentially across, yeah. Chain link, in between 200 exponential and simple, 200 simple is already rolled over. This looks weak overall to me. Lots and lots of resistance to chop through here, you know, but you can see these levels just as clear as I can. $31, you know, $35. I don't even know what's drawn on here anymore. You know, obviously that's going to be a tough resistance, but again, if we just take from the top, you know, to the bottom, we had the 618 here, broke down to the 382, slightly above the 0.5. So if we come back up and bust through the 618, we have trouble getting through 35. If we do, 39. If we come back down here and retest the bottom, 382 for 2250. After that, you know, 1855. And then potentially find support there. And that's a high or a low and a higher low. So there's definitely some potential. But Chainlink looks weak. It looks weak compared to a lot. But the 821 did cross back to the upside right here. So, you know, maybe Chainlink's about to get its push. It is just basically beating its head on the 200 simple. So I would say probably, you know, if Bitcoin just goes sideways to up, Chainlink looks probably good. FTM, I mean, there's nothing really to see here. We saved the 821 cross back to the upside. You know, we're below the blue slope line. Not great. Tons of resistance at literally this exact spot. So I think I deleted a bunch of these charts just to clean them up because there was so much junk on them. But yeah, I mean, this thing's trading very, very technically. So we're at resistance now. If we break through resistance, $1.65. If we break down from resistance, you know, $1.35. Then maybe $1.25. Solana broke back up, crossed 821 back to the upside at resistance right now. Close slightly above it, so that's good. Maybe we come up, retest all-time highs again. Again, I don't like to see the slope flip back over blue and us be below it. That's almost always a divergence signal for rejection. So, you know, but does not mean we can't break through $200 and then just get a massive rejection. Yeah, I think I deleted all these. trash coin charts because they were just getting a little dirty. At the 618 right now, if we break down the 0.5, 157. If we break up, 188. A double dose of breakdown would be 147. Looks okay, but again, none of these trash bag coins are doing anything. They're all like underperforming Bitcoin. One here, one there. Sorry, I had to cough. Try to cover the mic in time. Yeah, I mean, like one here, one there is like popping off, but I mean, Bitcoin had like a 10% move. Most alts had like a 7 to 12% move. So they're literally just tumors on the back of Bitcoin at this point in time. And every once in a while, one of them will just kind of pop off and run up in front. And then all of a sudden people are like, oh, wait, that's just a shit coin. I don't want that. And then it just comes back in line with everything else. Uniswap just oscillating between 200 exponential and simple. Same thing. 821 cross back to the upside. Last time that happened, we got a nice move out of it. So maybe some of these shit coins are getting ready to pop off. $31 maybe? I don't know. I mean, all I know is if I'm going to be in an asset and get caught in a dump, I would rather it be in Bitcoin than one of these, random trash altcoins. Trading pretty technically though. Resistance at 28. After that, 34. Maybe we go to 34. Support at 24. Maybe we go to 20, 21. Looks okay. Trying to break out to the upside, but just weak. It's just weak. People are losing hope. They're still hopeful, and the influencers are still talking it up like everything's gravy, but people are losing hope. For sure. And rightfully. I mean, these charts look not great. Look better than the stock market, honestly, but that's probably the only reason they're doing well is that they don't look worse than the stock market. At least they're like above their 200 moving averages. XRP looks better than most. It's above the 200 exponential and simple. They both have a positive slope. It's above the 8 and 21. Getting ready to cross back to the upside. Is XRP going to $1.38? Maybe. I mean, let's be real here, though. I don't want to get you excited. XRP is still trash, but the chart doesn't look bad. I mean, it does on a long time frame. On a long time frame, it's the worst chart. But short term, looks pretty good. Dogecoin looks like trash. Can't even get back above the 200 simple. 200 exponential, rather. I mean, this thing is dead. No one cares about Dogecoin anymore. Anybody that's still talking about Dogecoin in a good way probably just built their subscriber base pitching Dogecoin because it just looks like crap. Cardano looks stronger than most, well above the 200 exponential and simple. It did not regain the 821 right here, but if the 821 crossed back to the upside right here, I mean, the Cardano cult is just going to start popping off at the mouth again. Cardano is the best. It's going to a gazillion. I love Cardano. Tell Charles to come to my house, man. I'll buy him dinner. I'll cook for him. He can fuck my wife. I love you, Charles. I'm staking. Woo! Charles is the man. Chucky. Cardano beads. It bounced the 786 pretty good. It's at the 886. If it moves to upside, 245. After that, retest all-time high, 308. If it breaks down from $2, I mean, $1.71. We'll see. Look, it looks better than most charts, honestly. It really does. But, what does that mean? Does it mean it's better? Or does it mean it just more recently had a better move? Because that's really what it comes down to. Solana looks better because it had a better move recently. XRP looks better because it had a better move recently. Cardano, better move recently. Still trash. Still trash, though. DOT, 821 cross back to the upside. Looks okay. Had a pretty powerful move up off the bottom right here. What, 10, 11%? No, it's about standard. Hard buy signal. Couple green histograms. Still well below the slope line. I mean, it looks okay. Yeah, I think I deleted all these charts. I might have got greedy. I don't know if I just thought I wasn't going to have to cover all these shitcoins anymore. If they would just hurry up and capitulate, I wouldn't have to look at nearly as many charts. Let's see. From the high back here to the low back here, though, topping out 618. If we bust through $33, I think we easily get to 35. If we break down from the 0.5, which is basically where we're at, 29, $30. $30 is a solid support with the moving averages below us, too. Looks okay. Battle Axe, basic attention token, BAT on the daily, below the 200 exponential, 200 exponential and simple rolling over. This one looks weak. We do have the hard buy signal. It is above the 821. Maybe it shoots up to like 85 cents here. I mean, this thing is, it's been underperforming lately. Bunch of green histograms. Yeah, let's just go ahead and get rid of all that. From the high to the low, come back up perfectly to the 618, the end of the 236. Now it's above the 382. So where's it going? I would say BAT is probably going to 83 cents. Matter of fact, if you're going to see, let's see what that would look like. 17%. Man, there's probably a trade right there. 16.5% to the upside, 5.5% stop loss. If we start taking out the lows of these previous ones right here, you could probably even tighten that stop loss off a little bit. Or I could, because this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. 3-to-1 risk reward ratio, 83 cents target, 67.7 cents stop loss. Daddy like. Hard buy signal, bunch of green histograms, above the 821, trying to hold on to the 200 exponential. That would be a retest of the 200 simple. Is back going to the moon? Probably not. Is it going to put 16.47% in my bank account? Probably. Probably. Hint, hint. Matic. Yeah, this was another one trading very, very technically. Let's pull up our fibs again. Yeah, I mean, look at that. That's just absolutely ridiculous. Getting rejected at the 0.5. I think realistically, the 618 is our next target to the upside. $1.62. 382 to the downside. $1.12. Possibly breaks down to 89 cents, but I'm maybe a buyer there. Possibly breaks up to $2.11, but I definitely wouldn't be a seller because I don't have any Matic. So we'll see though. I mean, look, last time we had these 821 crosses back here, we saw quite a bit of follow through on the majority of / all these shitcoins. So, you know, that was a 70% move on Matic last time. And technically we're potentially putting in a higher low. So, you know, is it going to go 70% again? I don't know, but is it going to go right here? I mean, that's 70%. Let's take a look at what this would look like. Let's take a look at the old Matic. I mean, 3-to-1 risk reward, 67% to the upside, 20% stop loss. There's no way I would ever run that stop loss. I mean, you could just run 5x leverage for liquidation. Liquidation or bust. Either 350% to the upside or bust or broke or out of money or liquidated. But if you want to gamble, it's not bad. But realistically, if you wanted to like be a reasonable human being and not have some crazy just like degenerate stop loss, you know, you basically wait and see what happens here. If we break down and take out that low, it probably is going to fail. I mean, that's probably like a little starter trade setup to get you into the big boy trade setup. 7% stop loss, 6.6, 26% to the upside. I mean, there's meat on this bone for sure. And that's a 4-to-1 risk reward ratio. I might have to dabble in some Matic. Some of that fatty Matty. Looks okay. It actually looks okay. Probably one of the better trade setups out of these charts. So Bitcoin dominance, nothing has really changed on the weekly. You know, we kind of have like this little bullish divergence action going on here. But I mean, what does that mean? Is Bitcoin just going to break out all of a sudden, or altcoin's going to take a shit? It's one or the other. Bitcoin either goes to new all-time highs and altcoins do nothing, or Bitcoin dumps and altcoins take a dump. Bad. Or it just goes sideways forever. But probably not going to happen. I think Bitcoin dominance probably going to 45. Definitely some bullish divergence playing out right here, but doesn't look particularly good. Definitely in a downtrend and has been for a long time. Total market cap, again, you know, sold off pretty heavy, pretty aggressive buying back up here. You know, definitely some bearish divergence between the top here and the top here, the top here and the top here. We have technically broken down below the blue slope line. It is still blue and we're only slightly below it. But it doesn't look great. I mean, does not look great. I mean, this start looking real bad when we get a weekly close below 1.93 trillion. But for now, looks okay. Looks okay. It's hanging on by a thread. Coinbase breaking down as expected. It looks like it wants to bottom out right here. Looks like the Stoch's looking to cross back up. I mean, I can't get bullish on Coinbase. I would literally rather just buy any crypto than buy Coinbase right now. I just don't see any argument for it. Robinhood looks like trash. 821 cross back to the downside. I mean, it's going down to 39, try to carve out a bottom. If it can't bottom at 39, it's going much lower. I would expect it gets down to 39, and then we see any strength at all from it, it's going to look like some serious bullish divergence and then break out to the upside. But, I mean, I don't know. I really don't know. I mean, Robinhood is so sketchy. Like, they're like days away from probably just getting like massive fines from the SEC from like 20 different shady ass activities they've done. So I don't know. That's a tough one. That's a tough one. They're about to get XRP delisted from the business section of the world. Maybe not, though. I'm sure they could just pay some trillions or some millions or some billions. MicroStrategy looks bad still. Between 200 exponential and simple. 821 cross back to the downside. I mean, hard buy signal. Maybe just a low, a higher low, and then a higher low, and it's going to a higher high. Maybe. I don't know. Maybe. Mikey Snailer. I mean, this yellow resistance where we need to get above. If it gets above that, it's probably coming back up to 800. And then maybe it finally completes this move up here to 924. I doubt it, though. Michael Saylor probably already stole everybody's money and ran away. So, but we'll see. Bed Bath & Beyond. So I guess we were right about the descending triangle break. I guess Bed Bath & Beyond just capitulated because it does not look good. Basically had this giant descending triangle in play forever. Saw weakness after weakness after weakness. 200 exponential and simple officially crossed the downside. Bed Bath & Beyond is useless. Came down here and look, remember we were talking about this? How about gaps and how they usually fill, but sometimes it takes months and months and months. Well, guess who just filled their gap? Bed Bath & Beyond. Congratulations, Bed Bath & Beyond. You did it. You went to zero. I mean, I don't know, though. Maybe, does it fill this gap? Probably eventually. Probably not right away, though. I don't think anybody's rushing in to buy the dip on Bed Bath & Beyond. And you know what? Once something becomes a meme stock, it's hard to respect it as like a real thing. And if we just kind of zoom out a little bit, let's be real. Bed Bath & Beyond has been dying since 2014. Its top was in 2014. And then it was literally just dead. And then it meme stocked its way back up to a lower high. So this is like the MicroStrategy of, what does Bed Bath & Beyond sound? Of random shit. This is like the XRP of, what do they sell? Soap and little janky toys that you could probably just buy off like Alibaba. Yeah, enough analogies. Let's keep going. The game stonkers, how they doing? The GMEs, man, GMEs need some of them GMOs, son. I mean, 200 simple above the 200 exponential now. This thing is just tightening. I mean, what? Are you guys going to squeeze this juice or what? You going to squeeze these games? You're going to end up living in your mom's basement forever if you don't get out of this. I don't know. There's nothing going on here. Bearish control zone. 821 crossing. It's losing strength. The GameStop cult is not looking good. It's below the slope line. Bunch of red histograms in a row. Not looking good for the old stonkeroonies. AMC, how the apes doing? Lost 821. Try to push back up here. Another squeeze, bros. We're bullish. Let's go. I don't know. I mean, bears are clearly in control. Above the 200 exponential and simple. Blue slope line, but they're well below it. This thing looks like it's going to get rejected. It's coming back down to $30 again. These AMC guys, man, they're in trouble. They don't know it, but they're in trouble. Yeah, $30. I just don't see it happening. I mean, if this area holds and it starts moving back up, though, 52. I mean, that's a nice range. That's a tradable range. The problem is, if you trade this and you get stuck in it, you end up with AMC, which is going to zero. So that's a tough one. It's all or nothing. It's all or nothing. I'd rather be stuck in Matic than in AMC, though, to tell you the truth. But you do get to be part of a cult of monkey boys or apes. So that's good. Newegg hit our targets at downside. Didn't even get a bounce off the 200 exponential. 200 simple below our head now. I mean, we basically just bleeding out. Okay, look. Pumped up to the upside. Throat slit. Bleeding out. Just taking a while to die. So what happens next? Well, eventually it dies. But still got a little time. I mean, this is a real company, though. I literally have bought things from this company in the last decade. This is not AMC. This is an actual company that does stuff. I mean, apparently they're not doing great, though, because they've literally just been dying since their inception. Since 2010, all they've ever done is sell off. This might be the worst chart ever. It's maybe the worst chart in existence. It's quite possibly the worst company listed on an exchange that didn't go to zero. But I don't know. I mean, you got to be a moron, though, to get short squeezed in something like this. When it goes to $2.69, you just get out. Why wouldn't you have already been out of this stock? Like, do you really got to short it all the way to zero and then get squeezed on by some kids in their parents' basement? I mean, after this candle right here, though, whoever wants Newegg again? That's the biggest rejection candle I've ever seen. This is the worst candle I've ever seen. But that's probably the best candle I've ever seen. So I don't even know. I mean, 740%. How was your month? Pretty good. Oh, yeah? Tell me about it. Did 740%. Oh, man. What were you invested in? Something cure cancer? Nah, man. Joined up on the Newegg crew, bro. We squeezed those fools. Maybe Elon Musk is right and we are living in a simulation. At first I thought he was just an idiot, but he might actually be right. DraftKings looking like trash now. 200 exponential and simple have rolled over. I mean, this thing looks like it's ready to let go. I mean, once Kathy Wood buys into something, just automatically assume it's going to be slowly going to zero. Because, like, literally anything she buys immediately pumps and then dies afterwards. So, yeah. So that's it for our meme stocks and cryptos. And let's finish it off with a quick look at our commodities and other random charts that just somehow ended up on this little group. XAU gold still looks bad. Below 200 exponential and simple. Bear market. It's in a bear market. Definitely in a bear market. It moved this much. And everybody was like, look at gold. Gold's busting off. Gold's breaking at the seams. Gold's going crazy. It's in a bull run. Gold is still in a bear market doing nothing. Selling off bad. Okay. It looks like trash. Silver, however, silver was going sideways for a long period of time. Also in a bear market. And once again, looks like trash. It looks, it's like if gold is like the yellow version of trash, silver is the like metallic gray version of trash. I mean, it looks like crap. It's in a bear market. It broke down from a channel. People are like, it's a triple bottom. It's triple bottoming. Silver's going to the moon, bro. The squeeze is on. We're going to squeeze each other off. Wait, what? Did I say that out loud? Oh, no, they're going to know. I mean, when you watch like the silver squeeze, like, and silver, like, channel videos, the dudes that are in silver and like join the silver cult have aged like 15 years in the last like year and a half. Like they were all like the happiest they've ever been right here and looking great and talking about silver to the moon. And we were right. Told you so, bro. And then this right here, this like year period, they all aged like 15 years. Like some of these guys look like literally look like they're on the route to like the Crypt Keeper. And what's his name? Chris Marcus? He like moved to Mexico and like he looks like a silver bandit now. Like what is wrong with these people? They're like so mad too. I love to watch their videos like and just laugh at them. They're like, this is bullshit. The manipulation. Blah, 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 blah. Why don't you just get on the side with the manipulation? Why don't you just short silver or buy any other asset ever? Like, get out of here. These freaking morons. And I love silver and gold. I'm a hardcore silver and gold fan. But let's be real. I'm not all in on the only one asset that does nothing. That's only an idiot would join a cult and be the only cult that doesn't make money. You could literally be in the AMC cult and look at the silver guys and be like, told you so, losers. And that's AMC. Jesus. You could be an investor in Newegg and you're better off than buying silver. Let's be real. We live in a crazy world. And the more something makes sense, the less you should do it. It's a fact, man. It's a fact. Gold silver chart, still doing exactly what we said. Just finding resistance, 200 exponential and simple. I expect it to just grind around, maybe gets a little pullback, but bursts up here. We'll see. It's just still just doing the same thing we've been talking about forever. Saw it happening beforehand. So platinum, what do you think is going to happen next? Well, it looks like we're going to get that cross back up. Probably come back up to like 1050, maybe 1120, something like that. If it gets rejected, it probably just bleeds out. But I mean, it looks likely that it's going to get a bounce here. This is our third drive of bullish divergence. Here's our initial push down, lower push down here, and then, or higher push down here, and higher push down here. We have a push down here, lower, lower, triple bullish divergence on this. You know, this is the Bitcoin chart before it plays out. You know, you're basically in a clear downtrend, depending how you draw it. You know, I like it like that, but you might like it like this. I like it like that. And, I mean, that's our resistance. We're at resistance. We're probably going to break through resistance. We're going to get the 821 cross, and then we're going to get the measure move break to the upside. And then the measure move basically going to be, you know, from the bottom of the range to the top of the range, something like that. And, you know, probably going to take us back up to at least initially the 200 exponential, maybe the 200 simple, you know, but I think probably 1077. I mean, is there enough meat on the bone for that to be like worth it? I mean, 10%, sure, if you're trading like paper platinum, but you know, this is why you don't trade like little moves on physical metals, because you know, you pay a premium when you buy it and then you get spot for it when you sell it. So spot better be less than the move, and the move is 10%, so you take a bunch of risk to make like what, 3 to 5%? No, it's not worth it. And then you got to go to the store and actually sell it or buy it from a site and then ship it back to them, and then there's shipping costs, and then there's risk that the postman steals your platinum. First Majestic looks terrible. Looks so bad. God, these miners are just horrible. Broke back down below the blue slope line. Bear market on First Majestic. Bear market on Silver Juniors. Looks worse than anything. These things look so bad. So bad. So bad. USAS, I mean, so bad. It's out of business. They're gone. It doesn't even exist anymore. Someone's just going to buy them. Some little kid is going to show up with a piggy bank, okay? Smash it on the table and be like, I'm going to buy First Majestic. I own you now. Like, these companies are literally worth nothing. They actually have, like, land that has precious metals in it and, like, equipment and stuff. So, at some point in time, they have to bottom out. And when when silver and gold miners bottom out, they're going to just explode and go absolutely parabolic. And we're all going to be rich, and everybody will be happy, and we'll see, you know, all the silver guys on TV talking about, I told you so. After 48 years, I was right. But the truth is, it might be another 3 years, might be another 5 years, might never happen. Maybe the asteroid lands full of silver, and all the silver guys are like, no. I doubt it, but it's possible. Tilray, these pot stocks look so bad too. And you know what? I did a little homework on these because I was like, oh, they got to be going up eventually, right? They topped in September 2018, put in their bottoms in March 2020, so like year and a half roughly in a downtrend right here, you know, and then started kind of moving back to the upside and failed to save this trend. I looked at the valuations on these things. You know, one, they all have negative earnings, so you just have to do like price to like sales. You can't even do like price to earnings. Most of these are valued at like 9 or 10 times like price to sales. Or, I mean, they could literally go down by half, and I would not be surprised. So, I mean, it might be a while before these pot stocks pay off. I looked at all of them too. ACB, tail, not all of them. ACB, Tilray, Canopy Growth. They're all like 10x price to sales and making no money, not profitable. So I don't know. Bad, terrible, bear market, bad, terrible, bear market. Uranium trying to rally right here, trying to save this little move, bouncing off key support. I mean, this could go either way. Again, I'm super bullish on uranium for a long time, like into the future. But I mean, we were getting into these at like nothing here, and they've been bursting to the upside. And I'm not sure this whole inflation trade is going to work out. That's not great for commodities. The energy thing is kind of sketchy. I think long term, uranium will be useful because we need nuclear power because all this green energy bullshit is not ready for a while. But, I mean, I don't think it's going to happen. I think oil is the energy you want to be in, or nat gas. UEC, again, just looking like a double top, like lightweight here, showing some weakness. These are starting to look weak after parabolic uptrends to new highs, bounces off the 200 exponential and simple. I think we're coming back down to retest them again. Maybe not, though. I don't know. CCJ, again, weak, breaking down below the slope line. In the bearish control zone after that push. Saving the 821 cross, though. URNM, North Shore, same thing. I think Sprott basically just pulled like a uranium short squeeze. And I just don't think it's going to last. I really don't. I would have much preferred they just like slowly bought quietly. But it just feels like a meme stock now. A big yellow cake meme stock. Copper looks like it's topping out here, going sideways forever. Descending triangle, 200 simple above 200 exponential, barely hanging on to it. This is CPER, United States Copper Index. All the other copper charts look the same. Lithium, 821F crossed the downside. Looks like it wants to break down from its key levels. I think it's coming down to $70. Looks like it topped. I think it retests the previous highs and 200 exponential and simple. Commodities don't look great right now. Hydrogen retested the lows as expected. I think it breaks to the downside. Maybe gets another push back up, but I don't think this is going to be breaking out anytime soon. Lumber futures. Looks like we're putting in an ascending triangle right here. I think this goes higher. I mean, it's definitely weak. It's definitely in a bear market. The first trade played out 38% to the upside. I really think we're gonna do this. I really think we're going to push up here, retest the 200 exponential and simple. We're going to fill out that right shoulder, as I've been saying forever. And then I think it's going to break down and capitulate. And I'm going to tell you the truth. What does this mean for the world if the lumber chart plays out? It's probably not good. It's probably not good. Because it means we're probably not building anything out of wood. But I don't know. Hopefully I'm wrong and lumber just goes parabolic again. And then no one can build anything because it's too expensive. So either way, we're screwed. Either lumber capitulates because nobody wants it, or no one can afford it because it goes to the moon. So either way, hopefully it goes sideways so the world doesn't end and people can still use wood to do stuff. Caterpillar, I would think with California burning down all the forests that eventually lumber would come back into style, but I guess not. Caterpillar breaking down below 200 exponential. I mean, this looks terrible. Like CNBC's like, Caterpillar looks great. Like an actual caterpillar that's like crawling or something? Because the chart looks terrible. The chart looks absolutely terrible. Maybe they're talking about like a little green caterpillar like moving around the studio. Maybe they have a pet caterpillar and it's getting ready to turn into a butterfly. I don't know. Looks to me like it's about to go into a cocoon. And it's going to be a while before that thing hatches. Deer looks slightly better, just hanging on to the 200 exponential and simple, but not particularly great. I mean, it's range bound at this point in time as far as I'm concerned. Hard buy signal, but it just selling back off. I don't like to see big red candles like this. Rejection. Not good. I think this thing's going to test the lows and then see what's up. This looks great. AM, Antero Midstream Corporation, looks great. I mean, was in a bear market forever. Above the 200 exponential and simple, showing some weakness right here. But, the initial bounce off the 200 exponential and simple is good. Now it's at new highs, not all-time highs, but cycle highs. This thing looks like it's going higher. It really does. I was a little bearish up here. If we go to the weekly, we're at the 200 exponential and simple. We're going to have some difficulty cutting through these areas. But if we do, I think we're coming up to like $13. I mean, that's like a 30% move to the upside. So, but I mean, there's definitely some... It's tough to buy at these levels. Let's be real here. Let's be real. Cemex, breakdown to the 200 exponential and simple, showing some weakness here. I think it's going to get a pop back up to a lower high, but again, it looks weak. You know, it's trying to lose the slope right here. It's been a bear market forever. This just looks like a little bounce back up to just go lower. And again, you know, if people aren't building stuff, no one's going to need cement. So I don't know. These charts tell me that this infrastructure thing and the future of infrastructure and building out is probably not going to be good. But we all know what's going to happen anyway. You pass a $5 trillion infrastructure bill, or 3.5 trillion, whatever, and then like 1 trillion of it one day gets spent on infrastructure in like 10 years. So I think that's already all priced in. CLF, steel, iron, Cleveland Cliffs, the whole ordeal. I mean, it looks toppy right here. First time it hits the 200 exponential and simple, it probably bounces. Maybe to a higher high, maybe to a lower high. We broke down from that key channel we talked about for a while. I expected a retest and failure. We came down here, jumped through the potential buy zone to the 200 exponential and simple. I think it's going to have some resistance up here now at like $22, but it probably gets some kind of bounce off this. I would imagine. The measure move is still down here at like $15 though. But I think a lot of this stuff is like topped out and people are realizing it. Ford got that Bitcoin move before Bitcoin did first. We had this descending channel right here. You get rid of some of this junk. What a dirty chart. We had this descending channel right here. You know, broke out, measure move to the upside, hit our target perfectly. Now we're consolidating above support right here. Maybe we're going up here. Maybe Ford's building some vehicles. Maybe they got something worked out with Biden. I'm interested to see, did Nancy Pelosi buy like a couple $1 million in calls for Ford? Because, I mean, hey, maybe we want to just get on the Pelosi train. I mean, I personally would not ride on the Nancy Pelosi train, but I don't know. Maybe you have different tastes than I do. But stock-wise, she does pretty well. But again, she maybe has some insider information, but nothing illegal, though, obviously. Because, you know, Speaker of the House would never do anything illegal with, like, insider information. And even if she did, no one would ever care. Ever. Or Federal Reserve guys who, oh, I'm a Fed Reserve president, and I just so happened to buy a bunch of stuff right before the Federal Reserve did some key things that made that stuff pump. What? That was total coincidence. Total coincidence. GM, General Motors, slightly weaker, but same thing. Same thing, basically. You know, same channel. Had that little poke its head out the top over here. Broke down from it. Getting the measure move. Measure move took it to 200 simple. Looks okay. I mean, it's like the worst version of Ford in more ways than one. Chart-wise. But also the vehicles. Hasbro broke down from the key level, bear market. 200 simple and exponential have rolled over, bear market. And look, I'm not the only one who decided it was in a bear market. Because no. Looks terrible. Could not hold that level. Barely trying to hang on to that blue level. It's coming down here, $82. Am I a buyer at 82? Actually, maybe. But probably not. Man, looks so bad. Everything looks so bad. People are like, what are you buying? I'm like, cheeseburgers. That's the only thing that looks good. Works. I mean, retesting 200 exponential and simple. This thing's trying to turn around the trend, but we got to be real careful right here that it's not doing one of these where it just kind of creeps on top a little bit and then just goes down forever again. I mean, this thing is 100% trash, though. Let's be real. This is like the MicroStrategy of MicroStrategies. You know, it was, at one point in time, it was worth $100, and now it's worth $2. So 98% of its value is gone. So, but hey, maybe it bottomed. It was so close to zero, though. You're like, I mean, it was so close. There could be something there, but I don't know. I think we have a trade set up. Yeah, 143% to the upside, 26% stop loss. Is it worth a shot? Maybe. I don't know. Should you take it? I don't know. It's not financial advice. Any sphere, looks like it's coming back down. I expect this to retest to 200 exponential and simple. Same thing. Same as works. Total trash bag. Useless. Piece of dump. But, you know, it could be a fun little scalp for a couple 100%. Again. I do like this, though, on the monthly. Okay. Keep in mind, this is like MicroStrategy. It was worth $2,111, and then it went down to 35 cents. So it's a little off its highs. It's a little off its highs, okay? A little bit. It's lost a couple percent in value. It did go down 99 point. I don't even know how many decimal points does this go out. 99.999%. It did go down 99.99%. So if you want to round, we'll say it went down 100%. Okay. So it literally went down all the way. All the way. Okay. It bumped its head. It jumped off a skyscraper and died at the bottom. But not yet, because it's up now. It's back up. So it is on top of the 21. This looks like a rejection candle to me. But if this 821 crosses to the upside, this will literally be the first time ever in history that this is in a technical uptrend. I mean, aside from whatever this little whatever was. But if we're right, if this crosses back to the upside, I will probably add to this position because I would expect it to at least come to the 0.5. So if this thing goes from $5 or $6 up to $25, $26, that's a 5x. So and we already did pretty good on that first trade, 129%. But again, not for everybody. Not for everybody. Wouldn't want to be stuck holding the bag the next time this goes to zero, because it could be the last time. Weight Watchers looks terrible. Looks terrible. At support right now. Got to do something here. Old WTW. WW2. Trying to put in some work here. Blue slope line coming out of the bearish control zone, about to get the hard cross. Is Weight Watchers getting ready to burst to the upside? Or is it going to be like that 7 scene where the guy has to eat all those SpaghettiOs and then he bursts, but not to the upside? Is Weight Watchers getting ready to put in a 56% move to the upside? I don't know, maybe. I don't even want this on my chart for right now. It looks, Weight Watchers just looks so bad. They do have those little frozen cakes though. They were pretty good. Walmart looks bad. Bear market. Officially bear market. It did do that a little bit back here though and saved it. So I don't know. It's already pretty low though. I think probably it finds some kind of support around here. But what does this say? Walmart is the heart blood of redneck America. Okay. I shouldn't even say redneck. I think it's just, what is it? Poor to bottom class America. This is your heart blood right here. Okay. So if I think Walmart legitimately reflects the state of the economy, not like some meme stock like AMC. I think the fact that Walmart doesn't look good right now probably tells you all you need to know about America in general, about the United States. WMC, Western Asset Mortgage Capital Corporation. I don't remember who this was, but if you still want me to look at this and you're watching this video, let me know before next time, because I'm going to stop looking at this because it's going to zero. It looks like it's trying to carve out a bottom right here, but it also did right here. It also did right here. Oh, I think there is a reason. I said that last time and I'm still looking at it. It was putting in triple bullish divergence right here. 1 low, 2 low, 3 low, 1 low, 2 low, 3 low. Burst to the upside. A bursty burst. Oh, yeah. Oh, yeah. It's about to get a Kool-Aid man burst. 6% stop loss, 18% to the upside, 3-to-1 risk reward retest for a rejection off the 200 exponential and simple. WMC looking good for a scalp, but that's about it. 2 more. We're almost there, guys. VXX, iPath. Okay. This was the VIX. Yeah, we were talking about this potentially bursting up in the group here. Still looks the same. I mean, it's down slightly off where it was, but still looks the same. Definitely some bullish divergence here at the lows. 27% potential. That risk reward is like 2-to-1. There's definitely other stuff that's better to be in than this. 3-to-1 if we retest 200 exponential and simple. But I mean, when you get a move like this, when you get that COVID pop, that's a game changer. But you know, how many of those do you get? 448%? Not a lot. Not a lot. But even just one of these guys, that's what we're looking for right here. We're just looking for one of these little guys. One of these little pops. A little pop. Back to the reversion of the mean. Continuation of the downtrend. And last but not least, Quidditch, ProShares, ultra short. This is the triple leverage QQQ, like tech short. Same thing. You know, this 821 across the upside, potentially looking for that burst back up 15% to the upside, 7.5 downside stop loss, 26 to the upside, same stop loss. It's just a reversion to the mean, just that pop back up to continue the downtrend. So definitely some potential there. But yeah, we did it, guys. We made it to the end. Hooray, hooray. Definitely starving. Need to make some grub. Jump in the chat real quick, and I'm out like trout, ladies and gentlemen. Honkiness says, good, because I have a treasury short TBT. Bond King talking about teases rising. Yeah, there's a couple Bond Kings out there, and they're all smoking something. I don't know what it is, but you can get a lot of it, judging by the prices of the pot stocks. But look, let's be honest about the bond trade, okay? Bonds were in a parabolic uptrend for 40 years. Like, if you're not already retired off of 40-year bull market in bonds, like, what are you doing? Don't get bullish now on bonds. Don't get bullish when rates are at 0 on bonds. Like, the trade is over. You had 40 years to retire off your bonds. Like, it's over. It's over. If your name right now is the Bond King, you should probably just transition to something else. You're probably a soccer coach for your kids or something like that. If you're the Bond King. No such thing as Bond King. You probably have like a Burger King crown, and you got crowned by your wife right before you go unplug the toilet. Bond King, whatever. I don't know who you're talking about specifically. There's a couple quote unquote Bond Kings, but none of them ever go away, so they can't be doing that well. Because if you make a decent amount of money, eventually I think you would go away with your Bond Kingness. So, but there you have it, guys. That's it for today. Hopefully you enjoyed the technical analysis and a little bit of humor. Keep your eyes peeled here. There are bear markets everywhere. I don't care what anyone says. We are in so many assets are in bear markets right now. So many assets. The economy is in a bear market, the actual economy. The stock market is mostly in a bear market. A couple things look good, but how many charts did we look at today that we were like, those look great, or this is awesome? I mean, even the things that the charts look good on are not even at all-time highs. Like oil, uranium, some semiconductors, a couple of those like look good. But like very few things are even at all-time highs. And then everything else looks like straight up trash. It looks like straight up trash. You have a couple of the big stocks in like, tech stocks and stuff, Amazon, Google. Actually, Amazon doesn't even look that good. Apple, Google, Facebook. What else looks good? Nvidia. There's like a couple stocks that look good. And then you have crypto is, off its all-time highs by 30-something%. Most tech is off its all-time highs by 30-something%. Kathy Wood hasn't made $1 for anyone but herself in like a year. Just throwing that out there. Oil's still way off its highs, even though it looks pretty good. I mean, everything looks like trash right now. So not exactly like rushing out there to like deploy capital. One could argue that the best things to buy are the things that look the trashiest. But again, like pot stocks look absolutely terrible. The valuations are still through the roof. So there's so much more. They could easily lose 50% more of their value and be at like a 5-to-1 sales ratio. And then they probably just get bought out, merge. Who knows at that point in time? The silver and gold miners look terrible. Silver and gold charts look so bad. But maybe that's our value, but not now. Not now. I like to buy things like at the bottom when they start turning around. And the truth is, nothing really looks like that right now. So, I'm very cautious to where I deploy my money. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. I'm not looking for long-term investments right now. I like to long-term invest in things at or near the bottoms. I like to scalp things, short-term, like what we're looking at now. And then I like to buy into momentum on things. And most of momentum is waning. Most things are not at their lows or values that are acceptable right now. So the truth is, cash is probably king. Cash and scalps. That's what I'm looking at right now. So, that's ideal in my opinion. But it's all about diversification, risk, reward, or risk management, position sizing. Protect yourself, protect your capital, protect your principal, take care of your family, love yourself, love your neighbor. Be a good fucking person. Everybody do something nice for somebody, like random stranger, or maybe just like their kid living in their basement, or maybe you're the kid living in the basement. Maybe unload the dishwasher for mom and don't make her give you $20 to dump on AMC. whatever. Random acts of kindness. Let's all bust one out this week, and then we can talk about it in the comments on Wednesday. So, going to be a good week. See everybody in the group. Definitely get some cool trade setups rolling and make some gains this week. I've got a feeling that we're going to see some kind of sector or area of the markets or one of these random assets that we look at popping off this week, as we are now entering into the fourth quarter, entering into a new fresh month, and typically we'll see some kind of cool rotation that we can capitalize on. So let's get ourselves positioned for it. Make them dollar bills, y'all, or whatever your native currency is. I know my audience is all over the world. I hope you guys enjoyed the stream today and my goofy little mood that I was in. I'll see everybody in the trade group, Crypto Trend Trader, with our Sunday evening market look ahead. It is 10:32 p.m. Eastern Standard Time on 10/3/2021, and I'm out of here.